Risk comes from not knowing what you are doing. Rightly said by Warren Buffett. Good morning to one and all present here. On behalf of Lal Bahadur Shastri Institute of Management, Delhi, I, Tarun Singh Chauhan, student of PGDM Financial Management, feel greatly honored to welcome you all to this year's finance conference. We have amongst us today our chief guest, Mr. Sunil Soni, Chief General Manager, Punjab National Bank, our keynote speaker, Mr. Manu Kohli, founder, E-Mobility Ventures, Professor Praveen Gupta, Director, LBSIM, Professor G.L. Sharma, Head, New Projects, LBSIM, Dr. Pankaj Varshney, Conference Convener, Colonel Ajay Sood, Chief Administrative Officer, Ms. Shubhangi Gupta, President, Management Grid LBSIM, esteemed dignitaries, guests, members of the staff, faculty, and students. I thank you all for gracing this occasion with your august presence. Today's conference explores the theme of issues and challenges in fintech. In recent years, fintech has been developing and reaching emerging technologies such as machine learning and big data methods have all been increasingly applied in the study of financial economics. Such developments have generated considerable interest in the new and important research areas of fintech and emerging technologies. The term fintech was first coined in the 21st century to describe the technology used in the back-end systems of established financial organizations. Today, however, fintech spans various sectors and industries, including education, retail banking, non-profit fundraising, investment management, and many more. Through specialized software and algorithms, fintech helps companies, business owners, and consumers manage their financial operations and processes. Fintech has also come to include the development and use of cryptocurrencies like bitcoins in today's times. Although different sectors of fintech continue gaining traction today, a large part of fintech still focuses on the traditional global banking industry, and India is at the forefront of this fintech revolution. Now, I request everyone to rise for the Institute's anthem. May I now request everyone to please be seated. Thank you. Before we commence the program, let's take a moment to remember the man whose dreams and aspirations motivated others to work towards the common goal of the nation. The man whose basic idea of governance was to hold the society together so that it can develop as a whole. Presenting to you now a glimpse into the life of the recipient of Bharat Ratna Award, former Prime Minister of India and a man of masses, India's great son, late Shri Lal Bahadur Shastri Ji.
सत्ताईस मई 1964 पंडित जवाहरलाल नेहरू का निधन हो गया। देश गहरे विषाद में डूब गया। सभी के मन में एक ही सवाल था, कौन बनेंगे नए प्रधानमंत्री, कौन करेंगे इस महान सभ्यता का नेतृत्व।
आफ्टर नेहरू के बाद कौन होगा, तो ये उनको इस बात का एहसास था। जब मुझसे पूछा गया कि इस कमी को दूर कैसे करेंगे, तो उन्होंने कहा कि पंडित जी ने अपने व्यक्तित्व की वजह से, टावरिंग पर्सनैलिटी की वजह से, उन्होंने इस पद को शक्ति प्रदान की, और मैं प्रयास करूंगा इस पद से शक्ति प्राप्त करने की, जिससे कि मैं देश की सेवा कर सकूं।
2 अक्टूबर 1904 के दिन काशी के पास मुगल सराय में जन्मे लाल बहादुर का पूरा व्यक्तित्व ही गांधीवाद का जीता जागता स्वरूप था।
उनकी सादगी, पहली बात तो धोती पहनते थे, ये आम आदमी को उससे बड़ा भरोसा हो जाता था कि हमारे जैसे है।
पिता की छत्र छाया बचपन में ही छिन गई थी। विधवा मां के साथ ननिहाल चले गए, वहीं पर परवरिश हुई। 1921 में जब स्वतंत्रता आंदोलन में कूद पड़े तो निष्ठा और दृढ़ता के प्रमाण मिलते चले गए। 17 वर्ष की आयु से स्वाधीनता तक लगभग 9 साल जेल में काटे। रहीमन हीरा कब कहे लाख टका मेरो मोल। पार्टी कार्य में उनकी निष्ठा से प्रभावित होकर नेहरू ने लाल बहादुर शास्त्री को रेल मंत्री नियुक्त किया, परंतु 1953 में घटी एक रेल दुर्घटना की नैतिक जिम्मेदारी लेते हुए शास्त्री जी ने मंत्रालय से इस्तीफा दे दिया।
उन्होंने वो इस्तीफा देकर राजनीति में नए मूल्यों की स्थापना की।
नेहरू जी के मंत्रिमंडल में कई विशिष्ट पदों पर अपनी छाप छोड़ते हुए वे गृह मंत्री नियुक्त हुए। 9 जून 1964 पंडित नेहरू के निधन के बाद स्वयं पंडित नेहरू के चहेते लाल बहादुर शास्त्री ने भारत के दूसरे प्रधानमंत्री का पदभार संभाला। कुल 4 शब्दों में उस मृदुभाषी व्यक्ति ने देश को एक नारा दिया, जय जवान जय किसान।
उन्होंने उस समय इस बात का एहसास कर लिया था, देश के अंदर हमें अपने जो भंडार है अनाज के उन्हें पूरा भर देना है, और एक जो भारत के गौरव और गरिमा को देश विश्व में खड़ा कर देना है, वो अगर संभव है तो जवानों और किसानों की जय जयकार करने से ही है।
लाल बहादुर शास्त्री, Prime Minister of India, speaking on Independence Day in 1965.
हम हथियारों का जवाब हथियारों से दें।
5 सितंबर 1965 पाकिस्तान ने भारत के खिलाफ खुली जंग का ऐलान कर दिया। जवाब में भारतीय सेना पंजाब से सीमा पार कर गई। जब तक संयुक्त राष्ट्र की पहल पर युद्ध विराम हुआ, तब तक भारत की सेनाएं पाकिस्तानी सेना पर हावी हो चुकी थी।
वो किसी के दबाव में आने वाले व्यक्ति नहीं थे। जब ऐसी घटना होती है तो बहुत ज्यादा अंतर्राष्ट्रीय दबाव होते हैं। अगर आप दब गए तो झुक जाएंगे, वो नहीं दबे। लेकिन फिर शायद दोनों देशों की भलाई सोचकर वो युद्ध विराम पर राजी हो गए।
10 जनवरी 1966 ताशकंद। जिन आदर्शों के नैतिक बल का मजा वो पाकिस्तान को चखा चुके थे, आज उन्हीं आदर्शों की उदारता से उन्होंने समझौते के कागजात पर दस्तखत कर दिए। लेकिन अभी समझौते के दस्तावेज पर स्याही सूखी भी न थी कि उसी रात शास्त्री जी को दिल का दौरा पड़ा और उनकी मृत्यु हो गई। गांधी जी ने कहा था कि शत्रु का दिल जीतना ही वास्तविक जीत है। सुदूर ताशकंद में जब स्वर्गीय लाल बहादुर शास्त्री को कोसिजिन के साथ साथ खुद जनरल अयूब खान ने कंधा दिया, तो लगा जैसे शास्त्री जी बापू के फलसफे को चरितार्थ कर दुनिया से रुखसत हो गए थे। लाल बहादुर शास्त्री केवल 18 महीनों तक भारत के प्रधानमंत्री रहे, लेकिन अपने प्रधानमंत्रित्व के छोटे से कार्यकाल में शास्त्री जी ने भारत के हर नागरिक के कानों में आत्मसम्मान और आत्मबल का मंत्र फूंक दिया था। अपने व्यक्तित्व से उन्होंने निष्काम कर्म और पुरुषार्थ की वो मिसाल कायम की कि उनकी गिनती भारतीय इतिहास के सर्वोच्च महापुरुषों में होती है।
Following the tradition of Lal Bahadur Shastri Institute of Management, Delhi, I now request Mr. Sunil Soni, Mr. Manu Kohli, Professor Praveen Gupta, Professor G.L. Sharma, Dr. Pankaj Vashne, Colonel Ajay Sood, and Ms. Shubhangi Gupta to kindly light the ceremonial lamp and pay floral tributes to late Shri Lal Bahadur Shastri ji. I request all the dignitaries to kindly take their seats on the dais. Now, I would like to request Professor Praveen Gupta to kindly welcome our chief guest, Mr. Sunil Soni, with a token of our gratitude. Please, sir. Now, I would like to request Professor G.L. Sharma to kindly felicitate our keynote speaker, Mr. Manu Kohli, with a token of our gratitude. Thank you, sir. Moving ahead, I take this opportunity to invite our esteemed director, Professor Praveen Gupta, to deliver the welcome address and declare the conference open. Professor Gupta has had more than 3 decades of experience in industry, teaching, academic administration and corporate training, and making him a pioneer in both industry as well as academia. Before heading the institute as the director, Professor Gupta has conducted various managerial development programs and corporate training sessions for junior and middle managerial employees at prominent leading organizations. He has worked with Fortune 500 oil and gas marketing giant, spanning over sales, marketing, and supply chain verticals. Please, sir.
Chief guest for today's conference, Shri Sunil Soni, guest of honor Shri Manu Kohli, Shri Anil Shastri ji, Chairman Board of Governors, Lal Bahadur Shastri Institute of Management, Dr. G.L. Sharma, Dr. Pankaj Vashne, distinguished speakers for the inaugural session, Mr. Kumar Manish and Mr. Sridhar, faculty colleagues, students and friends. It is indeed a moment of pride for us as we have organized Finance Conference 2022, which is aptly titled as Challenges and Trends in Fintech Industry. We are on the cusp of a great revolution in terms of fintech. Every day, the country like India, through its journey in IT, which started somewhere in 80s, and that technology or our efforts and hard work in technology is serving and paying us well. We were discussing with our chief guest in the morning that technology is no longer a support function to business. Technology is in the forefront. So much so that if technology is there in your business will be there, otherwise you will be left behind in the race. Especially in financial sector, the advent of technology, the role of technology, especially in terms of whether it is payment banking or whether it is lending or whether it is insurance sector, it is playing a huge role in our life. Fintech is touching the lives of each and every person, irrespective of whether he is a senior corporate person or whether he is a businessman or whether he is a student or he is living in rural area. Whichever sector, whichever domain, whichever area you will talk about, it is having a role of fintech. Why I said we are at the cusp of a revolution, because in last 5 years, India has grown in terms of fintech leaps and bounds. I was checking some data. 2 years ago, we were behind China in terms of transactions, online transactions, mobile-based transactions. But post-COVID, tables have been turned. How challenges have to be converted to opportunities, I think India and Indians have shown their strength, their resilience, and we have grown in terms of transactions. Let me share you some of the data. Fintech adoption rate, India is 87%, while globally it is 64%. India is third largest ecosystem for financing. Indian fintech market is $31 billion 2021, and by 2025 we will be 150 billion. Fintech and its you can say applications is helping people in rural area, as I have mentioned, and by and large we are still 60% rural. Lot of people, they are using it for personal say ease of transactions, quicker transactions. They are also using it in their small businesses. So SMEs or MSMEs, they are also getting benefited through fintech. Agriculture and the agro products marketing is also helped by fintech. Current CAGR of fintech market in India is 24.57%, and it will be continued at this pace or a greater pace till 2025. What has been, say the reason or the growth drivers for fintech industry? You may have a difference of opinion, but you have to have a huge, you can say, agreement with me. The Aadhaar-based, say, identification, that was the trigger. It happened, or the journey started somewhere in 2008 and 9, and it was continued by the present government. Coupled with Jan Dhan Yojana, especially the opening up zero balance accounts, and that too to the tune of 45 crores in 18 months or 24 months. That was another reason for fruits of fintech to reach each and every nook and corner and each and every person. So I'll say Aadhaar, Jan Dhan, to some extent financial literacy, and e-payment facilities, and as the technology interface and technology infrastructure is known as India Stack, so there is a huge role of India Stack. So I think with these triggers or growth drivers helping us, I see a very bright future for fintech industry. Now, what is in store for our students? Why we should hold such conferences in our institute? My thinking and my understanding is these conferences give you some sort of triggers. Young students, young minds, these give you some sort of triggers. These give you an opportunity where people from industry and people who are entrepreneurs in this area, they are coming to our institute. You have a very good opportunity to listen to them, to connect with them, to understand, to see their journey and get inspired. That is the purpose of holding this conference. So I congratulate each one of you. I congratulate my finance area faculty members who have worked tirelessly for almost 3 weeks to put this conference into shape. I congratulate all my admin colleagues who have been a great support to us, and the students. Students are also multitasking like us. They are in the midst of their exams, the final exams. The second year batch is just completing their journey of PGDM, while first year is eagerly waiting for their industry internship. Thank you so much for joining us. And once again, I compliment each one of you. And I also extend a warm welcome to all our esteemed speakers. Thank you so much.
Thank you so much, sir, for according a warm welcome and sharing your valuable views on the theme. Now, I would like to request the conference convener, Dr. Pankaj Vashne, to introduce the theme of the conference. Dr. Vashne is Associate Professor in Finance area at Lal Bahadur Shastri Institute of Management, New Delhi. He has over 22 years of teaching experience, beside having corporate experience of over 7 years in the areas of corporate finance and investment banking. Please, sir.
Thank you. Good morning, everybody. Good morning, Mr. Sunil Soni, Chief General Manager, Punjab National Bank, Mr. Manu Kohli, founder, E-Mobility Ventures and angel investor, Mr. Anil Shastri, Chairman, Board of Governors, LBSIM, Dr. Praveen Gupta, Director, LBSIM, Dr. GL Sharma, Head New Projects, faculty colleagues, and dear students. It's a great pleasure to introduce this theme of the conference, this is challenges and trends in the fintech industry. The fintech industry in general and the Indian fintech industry has been growing with leaps and bounds. And a very simple indicator of this is that most or in fact all financial newspapers, they carry news on startups, and within that about fintech companies. And we hear a lot of stories about companies being funded by venture capitalists and PE funds, or new products or new servicing being launched almost on a daily basis. So probably and some of the factors which have helped in this development of this fintech industry, there are basically three factors if you look at it carefully. The macroeconomic factors, some are technology-driven factors, and some are customer-driven factors. It is in the Indian conditions. The rising disposable income, the large unbanked population, government and regulatory initiatives, expanding young adult population, improving internet access, and smartphone penetration have contributed to the growth of fintech industry. Government programs like the Jan Dhan Yojana, Startup India, license to payment banks, Digital India program, and recognition of P2P lenders as NBFCs, regulatory sandbox by RBI, IRDA as fintech industry has helped in playing a key role in propping up the fintech industry. Availability of finance through VCs and PE funds have also played an important part in the growth story of fintech in India. A large mobile subscriber base is driving the demand for growth for the Indian fintech industry. And India offers a massive opportunities for fintech players in the tier 2 and tier 3 towns as well. Even the public digital infrastructure like Aadhaar and UPI are also playing an important role. And each of these initiatives have opened various doors that accelerate to the growth of the fintech startups, and which is fueling this growth. Then technology, leveraging the new and cutting-edge technologies such as the blockchain, artificial intelligence, machine learning, cloud-based infrastructure has also provided a technological boost to fintech firms. Traditional banks and insurance companies are now joining hands with fintech startups to tap the unserved segments and upgrade their existing systems, enabling them digital offerings to deliver better experience for the consumers. Also, a strong tech talent pool has also helped in flourishing the fintech firms in India. Coming to the consumer-driven factors, a large population of Indians, of most of them having first banking experience in the smartphone era, this has helped the fintech adoption of fintech to a great extent, because there's no legacy experience that needs changing. Onboarding of new banking customers is easier task than getting customers to migrate from traditional business models. Although this is a great opportunity, this is a great scenario as of now, but the fintech industry also faces certain challenges. For example, data security and privacy of data is an important issue. Then changing regulations, rapidly changing regulations is also a concern. Regulations relating to investment exits, cryptocurrencies, payment regulations, data infrastructure security, consumer protection is still evolving. And lack of financial literacy and awareness is also a major problem, because a large portion of our population still is in villages, and the penetration use of these fintech platforms is mostly concentrated into the urban areas. So what can we expect in the future, for the future? A lot of things we can expect. For example, super apps, which can bring in diverse services under one umbrella. In fact, yesterday only Tata Group has launched their super app called New, wherein a lot of customers, existing customers of Tata Group can use simple one app and access their all their services. Buy now, pay later is a short financing solution that allows customers to pay for their purchases at a future date, usually interest-free. A modification of this is save now, pay later. Insurance tech, wealth tech, neobanks, and digital payments are also some of the new initiatives which we can expect in the future. To discuss and deliberate on these challenges and future trends, we have speakers from a wide spectrum of the fintech industry who will be coming in and joining us in today's conference and providing their perspective on these issues. And I hope today's discussion would be beneficial and thought-provoking to all, especially to our students. With these words, I again welcome all the speakers and the dignitaries to this one-day conference by LBSIM. Thank you.
Thank you so much, sir, for providing insights about the agenda of the conference. I take this opportunity to introduce you all our esteemed chief guest for today's conference, Mr. Sunil Soni. Mr. Soni is presently Chief General Manager, Retail Liabilities, Customer Acquisition and Corporate Communication at Punjab National Bank. He is a banker turned technologist, have been working experience of approximately 36 years. Out of above 30 years have been in the area of information communication and technology. He has served the bank in various capacities, such as branch banker, trainer in ICT, Chief Information Security Officer, Regional Business Head, and Head Zonal Audit Office. He has been on the board of NPCI, Drug PNB Bank Limited, CER SAI, PNB ISL since 2019 onwards and has been associated with various committees of these organizations. He is a certified information security auditor from Information System Audit Control USA and holds management degree CAIIB of Indian Banker Association, LLB and BSc from Delhi University. His area of expertise lies in IT, information security and business processes. So we are extremely honored to have you with us today for the inaugural address. I now request you to kindly address the audience with your diverse learning based on the years of experience amassed in the banking sector. Please, sir.
Good morning, all. And I am really privileged to be here, that I've been invited in this esteemed organization for sharing my experience with you. I won't say delivering a lecture. Second thing, I must thank Professor G.L. Sharma, who has got vast experience. Dr. Varshne, who's here. Dr. Praveen Gupta, who is the director of the organization. My co-friend here, Mr. Manu Kohli. And my other friends from the technology world, who are innovating technology. Ladies and gentlemen, I am really privileged to be here. And I think if I put together the sum total of the discussions or things that have been narrated in about past 5 to 7 minutes, the entire fintech arena has been covered. So, an issue with me, how to and where to start. So maybe I'll have to see this entire activity with a fresh pair of eyes. Now, as has been said, change is the only constant. So has been the case with the technology, and so has been the case with business. Those who have changed with times have survived, and those who did not, today are perished. One stark example of those who have perished, and that too in a technology world, was Nokia. They did not change with the times. Probably they thought that the operating system that they had has been the one which will sustain them for a long, long time. And also looking at the kind of operating systems which are evolving then, what they insisted is that they are okay with the current model that they have. The only pointer here, I mean, I'm not mentioning the company for the sake of doing that, but only to accentuate the point, is that in case if you think you're the best, and if you still don't change with times, you may not remain the best. Another aspect, which comes to my mind here is, while we look at fintech, as the name suggests, it is the financial world meeting with the technology world. Why do we need technology today? The way we were doing business long time back has been okay with us for a long, long time. So why should we look at technology today? Before I answer that, one more thing, which normally happens in any kind of integration is either disruption or synergies. So having said this, maybe I'll just go back one step, looking at why this merger and why do we require this? We've been doing business for a long time, and the way business has been done, we always looked at the operating profits. We always looked at, concerns being going concerns. We always looked at, creating something at our own will, because we thought we were the masters who are offering business to people. But over a period of time, things have changed, and changed to an extent where today we are looking at people's changing priorities, people's or the consumers changing tastes, or also to look at the way they are looking at business today. So it is not your business today anymore. You are only one of the providers. So if you fit into their area of activities, you are sustaining. If you don't, you may not be as successful as you were. So having said this, coming back to the word called fintech, which is the major theme, and I'm really happy that the theme covers the fintech and the gamut of fintech in entirety. So right from when I was going through the schedule of the conference today, what I saw was that it covers the entire gamut of activities, one after another in succession and in totality. So maybe those of you who are students here will definitely stand to gain the inputs, because they are going to help you understand what happens in the real life more than the books. Now, a little while before I said, while you look at some which is fintech in this case, either it will have synergies or it will have disruptions. So in our case of this world, we have both the type of examples that we have. There are some fintechs which have grown successfully for a long time, and they were there and sustaining still. And there are some fintechs which emerged, grew for a while, stopped, maybe had a plateau, and then declined. So we have examples of both the types. So what makes you succeed and what makes you fail, again, is the basis, which is nothing but your business model. Because if I look at providing or bringing fintechs into play, if I have a suitable, appropriate business model, there is every likelihood that I may succeed as a business entrepreneur. And in case if I don't really have a business model, the technology either has to be disruptive, that is, it is going to bring about a new element which has never been there in the sustenance or in existence, or alternately, the technology should be accentuating or increasing the growth of business, ultimately resulting into operating profits. Now, if we look at, the sustainability, so there are various different type of models which are today available in the market. If I start to describe, let me start from the point of view of investments, because that's one benchmark which helps you to identify whether the world is looking at fintechs favorably or not. So from a proposition where we were only at $1.6 billion investments in 2011, today we are at almost 30.8 billion investments, and it is still growing. But the investments today are getting difficult to get by the companies. The reasons? The investors who were ready to invest earlier into fintechs at the drop of a hat today are looking at sustainability of business, sustainability of the product, and also looking at the value add that a product is going to make. In case if the product is not going to make any value to business, the investors are shy to invest into the companies. So if I look at the value propositions, if I look at the numbers, from say almost as big as about 16,000 odd investments which were made a couple of years back, in 2 years' time, the investment into these ventures have gone less than half. And the investors today are, again, shying to just invest into any business proposition. Now, if I look at fintechs, it's a different perspective altogether. Here I was looking from a perspective of somebody who's going to invest, and here I should look at something from the proposition of the fintechs, what they're going to offer. You see, if you look at the archaic models of business, we've been doing business the way we were. Let me take the example of banks, because I belong to that industry, so let me take the example of the financial institutions. So we are attuned, we were attuned to doing business in a way. And that business was like you create a product, push it across to the consumers. If they take it, good. If they don't, survive and then look at the new product. But with the introduction of fintechs, 2-3 things happened. As a bank, I was a little meteor bigger in my size to change. For me, since the models were working, so it was very difficult for me to immediately change. Whereas the fintechs, which are nimble-footed, provided a change which was the need of the hour then. They would bring about a change very fast. They would look at introducing any new thing, any new model. You have to only explain to them as to what exactly is the pain area. So they would bring about a solution. But however, what happened over a period of time is that there are some regulations which started coming in, pouring in. There were some restrictions which started pouring in onto the fintechs. There were some business models which didn't click by the fintechs. Some did grow, some did not. And also, looking at the way the investors were, or the consumers were looking at these companies in a very different way altogether. Now, let me take the example of, the payment systems. How many of us today don't use the payment transfers which are instantaneous? Say, for example, Google Pay or Paytm or the WhatsApp banking, etc., etc. How many of us don't? If I have to ask for, there would be only a couple of you who would not be using, majority of you would be using today. The reasons? Conviction and confidence, that's all. That's the only deterrence. A little while before, while I was coming to this auditorium, we had a brief discussion, and probably the discussion was around whether or not should we look at technology. whether or not we should look at the solutions being offered, or whether or not we should look at what the fundamental changes or the fresh air is offering us. Take a step back, think about 2019, and we were very happy the way we were. Come pandemic 2020, and the divide starts. 2020, 21, we never had an opportunity of moving out of our houses. The necessities remain there. The changes then started happening. First change was change in our behavior. Second change was the change in the way we used to do business. So far, we were looking at branches providing a business. Or for all of you, maybe the purchases were offline and going to the market, buying things. And now with the constriction that you can't move out, the constriction on the branches that they are specific in numbers, or few staff members are expected to be there. So we had to think, reinvent ourselves and think with regard to giving enablements to you as consumers sitting at home. We had to create the details or activities from the fact that you should have been unable to do, or the staff should have been unable to do business sitting at home. Those functions which required no interaction, we immediately provided. Those functions which needed interaction, we forcibly asked them to be there available in the branches or in the bank. Now let me change this perspective and change it to any other area. Everywhere, the change was envisaged, and the way you started doing transactions was converted from physical to online. These 2 years have seen the digital adoption in leaps and bounds. So essentially what happened is that the change in behavior forced the change which was expected, and fintechs came to rescue because they were nimble-footed. They had not many lineages which they had to carry, so they provided solutions, and the solutions were adopted. Banking continued, and we are continuing today. But what happens thereafter or hereafter is that in case if the pandemic goes, we should be one more time looking at what provides value to business. Now looking at, as the theme says, the opportunities and challenges to fintechs. Opportunities are humongous. You have to only name a thing. And in case if the fintechs are enabling, my dear friend who's sitting right here, SubPaisa, right? He's from SubPaisa, and he just narrated saying that he has a platform where we do business and we enable the banks to meet the prospective borrowers, and the bank can finance them. In turn, what they get is a small commission, do business, right? But they have created a business model where they are trying to provide a platform for two different type of people to meet and transact. Now, this is only one such example. But the challenge today is that while, my dear friends, they provide the kind of solutions they have, the compliances which were not there earlier are now in leaps and bounds. Sensing the kind of change, sensing the kind of requirements, came forward and put some restrictions. So now it is no more any business, it is now the compliant business. Now why compliant? Now if I have to look at compliance, the issue with regard to compliance is that lot of information is changing hands. In his case, on his platform. In any other fintech's case, on their platforms. Talk about Amazon, they are having humongous and host of data of you all. You talk about any OTT platform, and they would find your card details, your name, and your identification available with them. You talk about any grocery store, so they would have all the details. Now the concern which was being raised a little while before while I came was whether we should look at these concerns, or whether we should look at the growth, or whether we should look at enablements. Dr. Gupta was telling me that he's still a little apprehensive going online. Please pardon me if I have to introduce that way. But the challenge and issue today is that if we don't change now, it is going to be difficult for us to survive in times to come, because the world is changing fast. Now, looking at the challenges, first challenge that I said with regard to, because time is short, so I may be constraining myself to specifics of the details. One is, there is an issue with regard to investments which are drying up now. The investors are looking at the returns today, and they are also looking at the way the business models are being propagated, and they are also looking at the way today you are able to provide the turnaround to them. How soon? That's what matters today in investment. Second aspect, as I said, the regulatory compliances. A little while before, Professor Varshney said, the regulatory sandbox. RBI has provided a kind of an enablement which allows the fintechs to try their products in a dummy, almost real-like environment. And in case if they succeed, that we at least trust them to quite an extent, saying that these models will sustain and would have the kind of compliances that we are looking at. So the other factor which is very predominantly there is with regard to compliances, because they have lots of PII, personally identifiable information. So that PII is to be protected by them, and they have to actually look at sustaining and controlling the leakage of that information, because if that leaks, and in case if the hackers they are able to succeed and take out that information, your details are up for sales and may create havoc into your financial world anytime. So the threat and issues what Professor Gupta narrated a while before will get fructified. Third thing is with regard to competition between the financial institutions and the technology companies. Some time back, we would have, as a financial institutions, we had our user experience, which was kind of archaic again, and we never bothered about it because there was no need. But since the business was changing, so we had to change. And in the interim, when we did not change, or when the user experience was being looked at by the customers to a greater extent, the fintechs prevailed. But now, the financial institutions have also started deploying larger amount of funds into their technology. Look at big companies now. Now, all these companies are today investing into their infrastructure. And since they have the business models, so the requirements of fintech may again be shaken up for a while. There is going to be a shake-up, and then eventually one more time we'll start. So it is like you're going like this, a plateau, we set ourselves right, and again then we go. So we are on a plateau as of now because the fintechs are far too many, the investments are difficult to get by, the regulatory compliances are very difficult to comply with because that requires a bigger amount of investments, and since in the paucity of investments, the fintechs may not be able to arrive at that model. One more element, which adds to this is, while I said that there is a contestation between financial institutions on one hand and another, the fintechs on the other. So essentially what we are looking at is whether this business model will sustain. Obviously it will sustain, but today is the time of shakeout, as I said. One more thing, which happens from here on is that we are looking at the geographies now to work at. For example, if you look at the payment systems, the most commonest of example where most of the fintechs have arrived themselves at. The geographies, while you are trying to look at the cross-border remittances, which would mean that you are looking at investors you're looking at the consumers to, transact and put the remittance, say, from one continent to another. Now, there are geography challenges, and there are also the connected regulatory challenges with these geographies. That's the reason why the companies in US, like Zoom and others, they thought that they would be able to, switch over to Europe and other countries, find it very difficult to transcend and come to UK and Europe. Had that been the case, they would have been there for a long, long time. But it is very difficult for them because a humongous amount of compliances which are required, which are regulatory compliance again. So essentially now we are looking at some products which are good use cases. We are looking at some investors who are able to sustain for some time because the returns are not easy. We are looking at the fintechs which are compliant, and we are also looking at the way the fintechs have to perform in times to come. Having said all this, a couple of more pointers that I should share with you. Synergies is one thing that we should look at, because we said disruption and synergies in the beginning, right? Now, disruptions we have understood. Synergies, let us see how exactly the synergies can be. Because today, on one hand, if I find the fintechs and I term them as attackers, and if I look at those big financial institutions which are kind of incumbent and which are there, so today the synergy between attackers and the incumbents is inevitable, and it is expected to be there. Now, in case if we don't partner with them, for us or for the financial institutions to take a big leap, it may take a little time because of our size and because of our legacies that we carry. So that's the reason why the interactions or the kind of synergies which are required, or partnerships are required between the two of us, right? Coming closer to our continent, let me just take a use case of China before I sign off. So far, in various different parts of the world, the fintechs have been aggregating, or either they are doing business on their own or trying to aggregate with the financial institutions or big companies, so to say. But looking at the models that China has adopted, so what they have done is that instead of the small-time companies, they have adopted big tech companies. The terminology which you might be listening to or hearing is called big techs. So the next buzzword is going to be big techs, because that's where China has adopted, I think 4 big banks have gone into 4 big tech companies which are providing solutions today. And the way the solutions are being created and the way they are being partnered and expressed, so they are showing promising results. So here, the pointer that I'm trying to bring here is that indeed the fintechs are going to stay here, but the transition of fintechs who are lethal, sustainability of fintechs which are compliant, sustainability of fintechs which can provide good business cases. Because in case if you have only technology and no business case, technology may not sustain and provide you the kind of direction that you expected. And fourth thing is prominently looking at the fintechs are shaping up or are going to be either shaped up or either going to be replaced by the big techs, because today is the time that the big technology companies are taking up and they are trying to provide the sustainability, provide the products, and provide the issues. So I would simply say that fintechs are here to stay. Needless to mention this over and over again. However, what is required today is that these fintechs have to be nimble-footed, faster, and effective in the kind of solutions that they're going to provide. Keeping in view the time constraint and also keeping in view the kind of the curriculum that is there available for the entire day, I think most of the day you're going to hear from people either who are practicing or the people who are there in the shape of providers. So wish you all the best, and wish you all the best to this financial conference 2020-22.
Thank you, sir, for sharing your valuable views. I'm sure the audience learned something new. Moving forward, I would like to introduce our keynote speaker, Mr. Manu Kohli. Mr. Kohli is an alumnus of IIM Kolkata with a career spanning over 20 years in consulting, investment banking, finance and business development across various industries. His last role was Head of Business Development for BP's petrochemical business covering Asia, Europe and Middle East. Within BP, he has worked across many business segments and geographies over a 14-year period. He is currently very excited with his new role as an entrepreneur, building a startup in the area of electric mobility. So, we are honored to have you with us today. I would now request you to kindly address the audience to kindly deliver the keynote address. Please, sir.
Thanks for the kind words and introduction. Good morning, Professor Gupta, Mr. Sharma, Professor Varshney, my co-panelist, Mr. Soni, and my co-panelist from SubPaisa. It is indeed a pleasure for me to come here and share my experience and views on the topic which is very current and relevant today, which is fintech. I am not a practicing banker, not a practicing financial professional. I am a money enthusiast, if I can call myself so. I love to look at what is happening across various sectors from a business perspective. And here I am talking about fintech. Neither I am a financial person nor I am a technologist, but I look at what is happening in the world, trends which people should look at, and especially for, as Professor Gupta said, for students like yourself who should be always kind of open to new ideas, looking at trends, keep their minds and eyes and ears open. I believe in this principle that you should always be a student through your entire life. I am always a student through my entire life. I keep learning about new things, discovering new things, and that's how I think is a way to go to grow in the business, to not be kind of as Mr. Soni also mentioned, not kind of being eaten away or destroyed in the sector that you're operating in. Though the kind of topic at hand today is very dear to my heart, and I can go on and on talking about stuff that I do, meet people, meet bankers, meet fintech companies, meet VCs. But there is a time constraint, so I'd like to focus my talk today on two kind of major parts. One is setting the context in terms of what is fintech, what is happening around the world, not only in fintech, but broadly in terms of technology, other sectors. And the second part of my talk will be very briefly talking about how do you value fintech. As Mr. Soni also pointed out, there's a disruption which is happening in the sector, and some of the old models that we've been used to as students, as working professionals, and I'm sure a banker like Mr. Soni, when you evaluate a business, the old kind of techniques and technologies, methodologies, processes may or may not work. So I'll very, very briefly touch upon what, as a business person, as an entrepreneur, I've seen how startups are being evaluated, especially in the fintech area. Yeah. Can we move to the next slide? Okay. as Mr. Soni also talked about, and this is very relevant for especially the newer generation, the younger generation, how many of you have actually, or do you carry a lot of cash in your wallets, or how many of you do visit banks for your banking services? I am slightly older generation than you are. I bank with Citibank for last 20 years, and I've never been to the bank. I have never been to the branch. I don't know what branch am I assigned to, but I do all my banking through technology. And I'm sure a lot of people like you, younger generation, use technology as a tool to do banking. Not only banking, you look at buying insurance, you look at investment products, you look at anything and everything which is to do with money today, you can do it through technology. You have apps available in your mobile phones. And as Mr. Gupta also pointed out, Professor Gupta also pointed out, while we were discussing before the conference, that mobile phone has suddenly become everything which is available today. You can buy grocery online, you can shop online, you can do your transactions, you can invest online. Everything is there in the palm of your hands. What is fintech? Very simply defined, fintech is finance plus technology. So use of technology in the area of finance. And I don't know if you can read through all the bubbles, small bubbles which are there. It is all about unbundling. So fintech is previously when you had banks which were providing or were a single source of providing funds, single source of lending, single source of maybe insurance products through some banking channels. Now, what is fintech doing is unbundling a lot of those stuff. So you have companies which are only focused in the areas of, say, crowd lending, in the areas of crowdfunding, in the areas of buy now, pay later. In fact, throughout my presentation, I'll keep giving my personal experience, my examples. Like in crowdfunding, I've done that since maybe about five years ago, which was a very new concept. And I raised funds for a very poor kid who was the son of my caddy. And he was diagnosed with cancer. And to kind of pay the hospital bill. So we used crowdfunding to raise money. And within 15 days, we were able to raise 5 lakh rupees and get that young kid operated upon. Unfortunately, he couldn't survive. But the reason of mentioning is that, of this point is, it is now omnipresent in the sense that everybody has access to funds or access to resources. You don't need to always go to a bank to get funds. Is it being democratized in terms of raising funds, lending money, buying insurance, investing yourself? I think so. And going forward is going to only increase. The next slide. And if you look at broadly across sectors, it's not only related to fintech, competitive lines are being redrawn. Initially, when you talk of banking or credit cards, you talked about American Express, MasterCard, Visa, and maybe Citibank. But now, when you talk about banking or credit cards, UPI, Paytm, Bharat Pay, and Google Pay are there to name a few. There are hundreds of such apps available, hundreds of such facilities or kind of processes available which you can use. Move across the different sector. Earlier, Mercedes had a competition with BMW, Lexus. Today, BMW and Lexus are there, but their bigger competition is Uber, Tesla, and Google again. Autonomous vehicles are being talked about. So competitive lines are being redrawn, and it's all led by technology. That's why I firmly believe that technology, and as Mr. Gupta also pointed out, Professor Gupta also pointed out, technology is no longer a support function. It is a key part of your business, and unless you have a very clear tech strategy in your business, you're doomed to fail in the going future. Yeah. See, this slide I found very, very interesting. I've picked up from CB Insights. In 2006, and when I joined BP, which was 2006, all the big companies in the world were oil companies or energy companies or commodity companies. Move to 2011, you have one company, Apple, which is a tech company. Then move to 2016, all the 5 largest companies in the world in terms of market cap were tech companies. 2021, again, all the largest market cap companies in the world are tech companies. My company, which I joined, or my erstwhile company, which I joined in 2006, was in the top 10 in the world in terms of market capitalization. Today, it is not even in the top 100. So the lines are being redrawn. It's not that tomorrow oil will go away. It's not that energy will go away. Whenever or till the time we are there as humans, we would need energy. You cannot replace energy. But what you see is today, data or information is the new oil. I'm sure a lot of you have heard about this. Today, technology, data, information is what the future is all about. Everything is information and data. Okay, thank you. This one? Okay. And I think it's kind of this point now I move to the next is abrupt, but I think this was just to set a context in how technology is changing the way businesses are being operated. Technology is changing the way competitive lines are being redrawn. But how do you value such companies? How do you actually, if you're in the business of, say, acquisition, if you're in the business of growing your business, how do you value such companies? How do you value such businesses which never existed maybe 2 years ago? How do you do that? Is challenging, is tricky. Is it a science? Is it an art? Probably it's a mix. Oh, sorry. Thank you. And as I mentioned, I think it's very, very difficult for practitioners of business to look at businesses who are in the business of acquiring businesses on how do we value fintech companies, not only fintech company, any tech companies, because there's no experience in the past, there's no historical data, and a lot of these companies are in the growth phase and they are burning money like hell. So they're burning money like $1 million every day. Some of these companies are burning $1 million every day. So how do you value such companies using traditional methods? Can you do that? I think it's challenging. On top of it, it's difficult for people, even for me, to understand how do you invest in a company or get funding for a company at maybe $1 billion valuation, $100 million, when he's losing $50 million every month. It's very, very difficult for you to kind of understand those business models, understand how do you value those businesses. On top of it, there is a flood of money which has come in. Like last year alone, $200 billion were invested in early stage funding, and almost half of that was gone into fintech. So how do you compete? How do you kind of understand those business models which were not there maybe 6 months ago, 2 years ago? And the pace of growth is immense. Like Facebook took almost about 4 or 5 years to reach to $100 million user base. The business that they acquired, which is WhatsApp, reached a $400 million user base in less than 4 years. Today, unicorns are being built every 6 months. People are getting funding, the second or third round of funding, the companies are becoming unicorn, which is $1 billion valuation. How do you justify that? How do you measure that? How do you value that? It's very, very difficult. It's as I mentioned, I think it's partly science, but it's also partly art. Partly understanding how the competitive landscape is changing, how competition is changing, and how people are perceiving future, or how people are looking at what is going to happen in the future. But still, there are a few things of which few drivers or few value points that you should have or you would have to look at when you look at valuing such companies, whether they are tech companies or fintech or agri-tech or whatever tech. One is the stage of development, where they are in the stage of development. Are they early stages? Are they what you call a seed funding round? Are they Series A, pre-Series A, Series B, and so on and so forth? What are the regulations in that sector, and especially so in the financial sector, as Mr. Soni pointed out, you are playing with somebody's money. So the compliance and regulations have to be very, very strong because it's somebody's hard-earned money. So regulation play a very, very key and important role in such a sector. The other thing is intellectual property. Again, I'm alluding to Mr. Soni's point on business model versus pure technology. Yes, if you don't have a very, very sound business model, you're bound to fail somewhere in the future. But if you have a very, very strong tech platform, if you have a IP on tech, I think there is a very high chance that you would succeed. Either you'd buy a company which has strong business model, but you have a IP which is not easily kind of fungible in that sense, then it becomes critical. The other key factor is management. Who are the people who run that company? Who are the people who have started that company? Then is customer preferences and acquisition. How fast you can acquire customers. People are no longer talking about an year-on-year growth of 10%. They're talking of month-on-month growth of 20%, 30%. These are the kind of numbers being talked about. So how do you kind of comprehend that kind of stuff? It's very difficult as a financial practitioner, in the sense that I do a lot of financial modeling myself for my business. It's very, very difficult to comprehend such numbers and such scale. Then definitely market potential, for which at least we don't have to worry about. We are a country of 1.4 billion. I'm sure there will be a market for everything which you can sell. Where there's a demand, you can sell that. But for me, out of all these 6 parameters, especially in fintech, 3 parameters are very, very key. One is regulation, because you're playing with somebody's money, hard-earned money. Second, intellectual property, and third is management. People behind the business, people who are running the business, is probably the most critical factor of a business to succeed. In terms of methodologies and lots of teachers and professors of finance, I'm sure they have much better idea on how to do this stuff. I've done it in maybe 20 years ago. That kind of broadly 2 methodologies of valuing such companies. Still, it's a hit and trial method in that sense. One is an income approach, which is a historical way of doing DCF, which is discounted cash flow method. I'm sure a lot of students would appreciate and understand that terminology. But what you do is you add some probabilities, risk adjusted, to look at various scenarios of cash flow built in, so that you then have some kind of some kind of semblance put in this chaos, because there's so much happening, is growing at such a fast pace. How do you do that? But yes, there are challenges in that, in terms of how do you look at profitability? None of these guys are making money. Even companies who are $50 billion market cap are losing money at maybe $500 million a year. How do you do discounted cash flow and come to a value where they have not made money, and probably some of them will not make money in the next 5 years or so? So it's very, very challenging to use that approach. Second, what are the expectations of future capital that is going to come in terms of how do they value that, in terms of what is my value, or what is the value that a PE fund or VC fund would put a number to my equity position, in terms of how do they value my equity position, the future rounds of funding, which then decides or give you some idea of how do you discount your cash flows. The other approach, which can be, I think, more practically used, is a market-based approach. So you look at when I talk about market approach, you talk about transactions which have been happening in this space. You look at the last maybe M&A large deals which have happened in that space, not only in fintech, but also maybe across other sectors, which give you some idea of the multiples that you can talk about, whether they are multiples on sales, whether they are multiples on profitability. Difficult because there's no profitability, so how do you multiply that? But yeah, definitely sales. Maybe at some level EBITDAs. But again, challenging, but at least gives you a peg in the ground to say, yeah, this is something which has happened, and I'm not maybe very far off from what has happened. But again, because the pace of change is so rapid, what happened yesterday might not happen tomorrow because it's changed, the sector has changed again. The other thing is, in these kind of transactions, though they are publicly available in terms of headline numbers, but very, very difficult to find out actually the actual valuation matrix. Nobody will put it out. So it's again a subjective kind of piece of information that you'll have to look at from your experience of the team which is valuing it. That's why when I started the discussion, I talked about it's not only pure science, it's probably a mix of art and science. And just to end my discussion, I like this quote by Mr. Lenin. There are decades where nothing happens, and then there are weeks where decades happens. So it's changing so fast, it's very, very difficult for a practitioner to kind of understand how to value these companies. Thank you. I'm happy to take any questions.
Thank you so much, sir, for sharing your valuable views with us. Now, I would like to request Professor Praveen Gupta to kindly felicitate our chief guest, Mr. Sunil Soni, with a token of our appreciation. Please, sir. Now, I would like to request Professor G.L. Sharma to kindly felicitate our keynote speaker, Mr. Manu Kohli, with a token of our appreciation. Please, sir. Thank you, sir. We will now begin with the first technical session of today's conference. Before we begin, I would like to request Dr. Shweta Agarwal to kindly welcome our honorable guest, Mr. Kumar Manish, with a token of our gratitude. Please, ma'am. Thank you, sir. Thank you, ma'am. Now, I would like to request Dr. Shweta Agarwal to kindly welcome our honorable guest, Mr. Sridhar, with a token of our gratitude. Please, ma'am. Thank you, sir. Thank you, ma'am.
I would like to take this opportunity to introduce our first speaker for the technical session, Mr. Kumar Manish. Mr. Kumar is the founder of SubPaisa, the world's first unified payment experience platform. He wears a cap of researcher who founded a market research company before venturing into payments. He is also founder and CEO of 42 Parks, a startup accelerator, one of India's finest growth consulting firms for startups. He is a former banker with companies like ICICI, Kotak Mahindra, and HDFC, with close to 22 years of experience. So, we are honored to have you with us today. I would now kindly request you to address the audience. Please, sir.
Thank you, ma'am. Hi, good morning. So, thank you very much, and to all dignitaries, to faculties and students here. I've been introduced already as a startup enthusiast, mostly working in payments and fintech. I said payments and fintech separately. That's the purpose why I said that. So I will pick up from what the dignitaries have already spoken about. I'll pick a couple of specific catchwords. So one catchword Mr. Soni talked about is compliance, regulations, right? The other catchword was disruptions, investments. And one more catchword about this Vladimir Lenin, that sometimes decades happen in a week, right? So sometimes decades happen in a week. Is it abnormal? So I don't think it is abnormal. It is actually normal. It has happened in almost all segments of our life, be it with our scientists, with physicists, with biologists. So it is normal. What is happening today in fintech is normal, and it is going to stay for long. So I'll corroborate what I have said. Well, so in regulations, in finance, let me set up the context here. Fintech, finance plus technology. Finance, we largely know about banks. So, and when we talk about fintech, we talk about the most buzzwords. There's a P2P payments, right? Peer-to-peer payments, what we say is we call about Paytm, we call about Bharat Pay, Google Pay. But very few would talk about Plaid. Very few would talk about Sentinel. Very few would talk about Mindblow, right? Reason is that as the disruption actually happened in finance by technology, what it did, there's another catchword I'll pick from there, that is unbundling, so that's the catchword sir has used. So what has happened, that you have unbundled the steps used in a complete finance domain, right? So for a bank, what a bank does, a bank will open a bank account, a bank will take care of your money, then bank will lend you. At the backdrop, what bank will do? Bank will ensure that there is a KYC done, there is no anti-money laundering norms are there. Bank will also take care of all terrorist activities, right? All fraudsters. So banks will do all these stuffs. there are companies who are into financial technology. They are not into payment. What they do, they only try to find out that how a bank can minimize the number of fraudsters, right? How the bank can actually save the time and resources to take care of plugging anti-money laundering rather than looking at the transactions. Now, these are two other things. So there is a company, and there's a Decacorn funded by the banks, by the customers, not by the VCs. Right? So that's the value. So in the entire value chain of banking and finance, there is a specific step that has been unbundled by a fintech company somewhere in Europe. Similarly, there is another company named Plaid. So what it does, it actually creates a platform by having multiple integrations from multiple banks and offering that platform to all startups. You use that platform and build something which might have taken you years and millions of rupees that you can actually build in some thousands, right? It is something like maybe 2 decades back when I had to build a software. At that point, what would I have done? I would have gone to a computer shop. I had to brought a couple of servers. Those servers I have to bring in my truck, stack in my office, then start do some coding and then make a software. Now today it looks so unrealistic, right? You can actually make a software by just having a laptop and maybe an internet. That's it, right? Why this happened? This happened because there was one disruption brought by Amazon. They call it AWS. That is infrastructure as a service, right? That's a platform. So they brought it infrastructure as a service. So remove infrastructure, think only about as a service. So when we talk about as a service offered by some deep techs, in India, as Sir was talking about some deep techs in China, in India I call deep tech like NPCI. What they have done, they have actually offered a platform, multiple platforms in fact, which can be used as a service, build upon the solution, unbundling the specific step that is required in finance, and offer it to the customers. For example, say any one of us is enthusiastic to give multi-bank account in one platform. Let's say I launch a mobile app, and wherein I say that I'll offer you 5 different bank accounts. Now, since I'm not a bank, I cannot offer it. I have to go to a sponsor bank. Now, let's say 5 different bank accounts you already have all bundled together in one mega app. Now, what would I have to do is that I have to integrate with all these banks so that I can actually fetch आपका bank account में how much money do you have, right? You want to transfer from one account to other account, so that bank account integration I must have it. Now, as a service, what NPCI has done, they have launched a beautiful platform. They call it Sehmati. This is an account aggregator platform, right? So by using that platform, build upon a specific service and launch the product. And that product is available for all and for everyone to take it. Unlike in other businesses wherein one wins and many loses, Fintech is a business wherein you have host of opportunities and everybody can win. But yeah, you have to actually run away from the rat race of just talking about P2P payments, and the rat race of achieving growth and not profitability. There's a difference between growth and profitability, right? So balancing growth and profitability, if you do so, there is a chance, and the customers do fund. For example, if I take my example, SubPaisa is funded by the customers as a profitable venture, right? So why this has happened? The quick turnaround of launching a product is essentially to identify all what as a service is available. For example, I'll give these examples for most of the students when they'll actually go into the field and try to find out where to work with. For example, let's say I want to launch a smart contract project. Now, smart contract is what? Smart contract is a new way of signing a contract between two parties, wherein all these legacy systems of stamping and somebody will do all this stuff is gone. So this smart contract is built upon digital ledger technology, distributed ledger technology. We normally call it blockchain. So if I have to build a project over smart contract, what would I do? Do I actually create a DLT? No, it is not necessary. You simply get the platform of Ethereum as a service and build that smart contract project, right? And that smart contract is adding immense value in fintech industry, right? Because the money needs to be, the confusion happens here that we think that fintech is about transactions. So it is not mere transactions. For a transaction to take place, there's a hell lot of workflow to be managed, multiple parties to come together. They have to sign their allegiance to what they plan to do, and then a transaction will happen. Once this transaction has happened, then the other aspects come, whether transaction was fraudsters or not. Recently, we have heard about that lots of, in this vaccine, this fraud vaccine is there in the field, right? Fraud vaccination is happening. Now, how technology or fintech can help here? See, vaccine is being purchased by somebody and is given by somebody, right? Now, we know that I have taken vaccine in, let's say, ABC hospital. But then ABC hospital has purchased from some vendor, from some contract, right? That is something we don't know. How is this possible that we also know it? Answer is blockchain, right? This technology called DLT, we come to know that yes, that vaccine is not a fraudster vaccine, right? How this technology is shaping finance, that's what I'm saying. Now coming to regulations and compliances, that's a very important word, sometimes very threatening, and in fact, large banks, they think that all these fintech companies are actually trying to actually correct. Yeah, their understanding is that they had been doing a business since years and years together. 150 years of old banks, lots of this brick and mortar shops they have, lots of employees they have, right? I tell you, there is a company named Sterling. What has it done? That it has reduced the banking staff, which was close to 140,000 staff, only to look at the transactions to find out whether there is AML or not. What it did, it worked on the technology, gave that technology to the bank. From 140,000 to the bank has reduced that staff to close to 28,000. And the response time of finding a fraud transaction has immensely increased, maybe 10x times, right? So why this? There is one, as I normally say that whatever is happening is completely physics. So there is one scientist in 19th century, I think 1865, he coined. His name was William Whewell. Yeah. So that's the scientist. He said how to actually, what is the term that can actually we coin to ensure that two opposite parties, completely in abstract thoughts, can actually come together and find out a solution. That, again, I'm actually trying to unbundle the entire step and find out a solution. And the scientists had coined a word, they call it consilience. You can actually Google it, very interesting word. So that consilience, what it does, it tries to find out the way to marry two completely opposite set of thoughts or arguments, completely opposite, maybe completely abstract. What fintechs are doing today is doing consilience between what this legacy large banks had been doing in past, and by offering this technology and disrupting the way the entire processes has been done. You know, so you cannot do a financial transaction in a new way, because it has to be under the regulators, under the compliance. You can't do anything new. But the point here is that whatever is being done can be done in a different way. This is what a fintech company is doing. For an example, if I had to become a bank, I mean, there's lots of talk about a neobank or a payment bank, you know. So to become a neobank and a payment bank, you have to spend years only to wait for the license to come. And forget about the fund and all this legacy that you have to create all this money and the infrastructure. Forget about that. I mean, just for the license, you have to wait for years. So do we want to wait for years to launch a solution? We don't, of course. So what we do, a fintech does, you have to get into finance, you have to look for a sponsor bank. Now a sponsor bank, what a sponsor bank will, is beautifully designed in India actually, that in recent 5, 6, 7 years, especially NPCI, I'm a great fan of that NPCI actually. What it has done, it has actually created as a service platforms for the banks to sponsor to fintechs. For example, I have to do KYC. Now, how to do KYC? You have to look for the PAN card, you have to look at the Aadhaar card, you have to look for, if it's a company, then you have to look for the registration and all this stuff, right? Now, many of us would know there is a platform called DigiLocker. Many of us know that there is a platform called DigiLocker, wherein what they have done, they have actually brought all these KYC related documents over one platform and offered that DigiLocker as an API. So if I have to launch a platform and offer it to bank, mainly into as a fintech, what I would do, I will simply take that API, bundle something up, wrap it up, create another API and give it to the bank. Sir, you are spending thousands and lakhs of rupees just for the KYC, use this. I mean, this is as a service available. It's beautifully done. I mean, it is not that you need to do something new. The same thing can be done in a newer way, right? So this is how fintech is doing. I mean, what fintech is trying to do, the trend, where the trend is going, that's the scope of this discussion, right? The trend is that we are trying to, I mean, all these fintech companies, in fact, I give an example. Like India, Mexico is a country wherein the most of the transaction happens in cash, 80% plus. Now, for the situation in Mexico and situation in China or in America is different. For Mexico, there needs to be a technology, has to be disruptive. So they have to find out how to bring that offline, this cash transactions into the mainstream, which is online. I mean, plug that thing, corroborating your offline thing to online. For what? To catch the footprint of that offline transaction. Simple. Why cash? Why countries, even India, is saying no cash? 2 reasons. One is, of course, the cost of a cash transaction. And second is, of course, to stop fraudsters, terrorists, AML things, right? First part that cannot be ignored if there's a market. Even Japan has close to 88% of cash transactions. Can you believe it? Yeah. So first thing cannot be ignored. Japan has done in a different way. They have actually printed their cash notes by using this banana fiber. So their one note can stay for 120 years. So उन्होंने अपना cash का काम कर लिया. The cost is gone. But the country like India, we have to reduce that cost. We are doing it. Let's say I was talking about Mexico. To ensure that the footprint of that cash transaction or offline transaction is done, you need technology. For example, Subpaisa is doing it. We are doing it for all these tier 2, tier 3 cities, just to ensure that that offline transactions can be actually digitally captured and footprint can be captured. So again, I'm saying, so what fintech is not doing something new, which many people actually think that we are something doing new. We are inventing something. So there is a difference between invention and disruption. So startups normally disrupt and not disrupt the processes. So not disrupt the policies, it disrupts the processes actually. So that's what fintech does. For an example, just 2 years back, I think in year 2020, China is the first country which has launched CBDC, central bank digital coin. Just 2 years back. And just last year, I think a couple of months back, Nigeria is another country which has launched the CBDC. And maybe a month back, India has declared that they are coming up with the CBDC. So what has happened? There were so many apprehensions about this crypto transactions. This is going to this never be accepted here. We are talking about metaverse, the NFT transactions. So much fraud is going to happen. What has happened? Nothing has changed. Now CBDC is coming. There's again crypto transactions, right? Or non-fungible or fungible transactions. Whatever you want to do, you can do through CBDC transactions, right? So whatever happening today is in fintech is natural, is happening fast. It is happening fast because we have identified one small thing which is the right catchword that one of our speaker has said, that is unbundling the entire process of a finance, starting from opening a bank account to lending, to doing KYC, to doing AML, to fraud detections, to ATM. There is, in recent past, you have seen that just a couple of years, maybe 2-3 years back, Apple has launched their credit card. And we think that why Apple will do it? Apple is a laptop computer company. Why they are getting into payments, right? Then we say that what will happen to all these wallets? Now this UPI has come. Now you see that this Amazon wallet is working quite well. Now why Amazon is getting into wallet? Why Amazon has launched Amazon Pay? I mean, why the hell they are doing it? They are in the e-commerce platform. Why they are getting into payments? Fintech. And there is another data has been shown by one of our keynote speaker, that every $1 out of 5 is going into fintech. Why is it going it? Why this $1, every $1, every 20-25% transaction is going in fintech? Reason is that every company is going to become a fintech tomorrow. That is the trend. That is the future. Every company is going to become a fintech company tomorrow. Why? Can you believe Uber or a company like Lyft or Ola? So these are what? These are aggregators of this, what do you call car aggregators, right? Driver aggregators. Now, why Uber or Lyft will actually launch a wallet or would lend their drivers? Why would they actually launch a fintech company? Reason is very simple. They want to retain those drivers. The more the drivers are retained, lesser is the cost and the time to acquire more drivers. Right? If they can get into fintech, they launch their own wallet, the transaction of the money getting transacted between the driver and the Uber or the Lyft is faster, right? Simpler. And why would they embrace blockchain? They would embrace blockchain so that actually they can identify that whether that driver is safe to ride with the driver for their consumers or not, right? So see, everything is linked, and every company is going to become a fintech, and that is why this disruption, the word revolution has actually gone. The revolution was the term can be used at that time when actually fintech actually identified that, okay, these are the steps to be unbundled. Now this has been done, so that revolution is over. Now it's a time of disruption. So every fintech and everyone who has actually identified their revolution is going to disrupt the market. It's going to disrupt the way banks are working, I'm not saying what banks are working. I repeat, banks are doing their job, the same job fintech will do, but the doing the same job will be different. That's what a fintech does. And that's what the fintech does in a way so that the compliance and regulations are met. And the compliance and regulations, the processes of complying to a regulation is also a job of a fintech, right? So that's what the fintech is, and that's what the trend for fintech is going to be tomorrow. As far as challenges are concerned, I see, since I have been working with, I've launched a fintech firm. So initially it was payments, now we call it fintech. And I've been interacting with multiple fintech companies, either online or physically. The good thing what has happened in recent past for fintech domain is that the countries, I mean, country like India, which is such a large country with such of bureaucracy around, even the country has actually identified that the revolution which I referred to at the past, right? Revolution was what? Unbundling the steps. So that revolution was done. So the country like India has actually identified, yes, that revolution was done already. So once that has been done, then the country like India has also started launching as a service 2 new startups or fintechs to leverage that as a service. Uske upar aap kuch bhi like insurance as a service, payments as a service, banking as a service, right? You can keep on adding there. So all is fintech, right? So as a service, something that the government is launching. They have launched. Just imagine they have launched RTGS as a service for a fintech to use. In recent past, only banks can use it. Now RTGS can be used by anyone, right? Of course, UPI is there. The wallets are there. Crypto, the CBDC comes. Crypto is there. So as far as challenges are concerned, the only challenges that a fintech industry needs to identify, 2 challenges. One is to stay away from the rat race. The things which make much of noise are mostly hollow, right? I know. Stay away from the noise, one, and stay put to the revolution which has already happened. Don't do any revolution today. Stay put the revolution which has already happened. Pick your thing, disrupt. Thank you.
Thank you so much, sir, for sharing your valuable views. I would now like to welcome our next speaker, Mr. Sridhar. Mr. Sridhar is a goal-driven financial services professional with experience in banking, payments, fintech, research, and client management, and is currently working as a senior manager at PwC. He is a gold medalist from Punjab University and is an alumnus of IMI New Delhi. He has held prominent positions at firms like Sutherland Global, CITI Mumbai, HSBC, and EY. He has been awarded with EY Excellence in Performance Award in 2014, EY Golden Beam Award in 2015, and EY Excellence in Team Management in 2018. So we are honored to have you with us today. I would now kindly request you to address the audience. Please, sir.
Good afternoon to everybody, and I've just written some notes yesterday for this session, so pardon me if I look at my documents. Also, my apologies that I joined late. I couldn't listen to the earlier kind of talks being shared by the dignitaries and in the LBSIM senior faculty. So first of all, I would like to extend my kind of gratitude to LBSIM, the faculty, and especially Dr. Shweta for inviting me to this session and joining basically the other professionals who are coming directly from the industry, and very senior members of the industry. And really to talk about fintech, which is close to me, Why? Because let me just contextualize my introduction. So I have been in the industry for the last 14 years, working with various organizations, as mentioned, Wipro, EY, HSBC, Citi, and now PwC. So what I've done over the last 14 years is actually at financial services industry. And in financial services, we have different buckets. We have banking, we have payments, we have wealth management, we have insurance. But I'm largely looking at banking, capital markets, and fintech and payments industry. So, and I've kind of looked at this industry from different lenses. So I started with equity research, where I was part of various teams like HSBC, Citi, covering banks from a sell-side equity research perspective. And then I kind of, with EY, I kind of gained exposure more of a consultant, a restructuring advisor or M&A advisor. And then now I'm looking at the industry more from a thought leadership lens. So that's just to contextualize before I share anything on fintech. And Mr. Kumar, I think, let me admit, Mr. Kumar covered all of the things which are happening today. Okay, he touched upon CBDC, he touched upon as a service model, he touched upon real-time payments, he touched upon other factors of what's happening in the fintech. I think there is nothing very limited left to me to cover now. I think to fill into that shoes. Thank you, I got it here. So. Coming back to this topic, basically, what I've observed as a fintech, we know fintech is finance plus technology. It's largely about technology, because finance we all know, but we don't know technology. We are still exploring technology. So there are different technologies we have in the world now, which we call contemporary technologies. Like we have artificial intelligence, we have machine learning, we have blockchain, we have what else? We have cloud, 5G, IoT, etc. So there are a number of things, quantum computing to come in the future. So there are a number of things we are still exploring. So we know these names, and we're putting them into practice in some of the processes we have in the legacy institutions or in the fintechs. But we really don't know their potential. And that's what we're exploring by introducing fintech in this financial services world, which is disruption we are seeing in the future. So I will try and kind of structure my thoughts. I think there's a lot. As I mentioned, Mr. Kumar covered a lot of stuff from a trends perspective. I'll kind of structure my thoughts more from a driver's perspective. Okay, so what's driving this fintech industry? So one of the key driver I feel is basically the population. Okay, so look at the population. Try and segment the population. So that's like we have Generation Z. Okay, we have millennials, or even millennials. We kind of split that: late millennials or early millennials. Okay, so this is the population which has kind of born after, let's say, 1992 onwards or 1993 onwards, kind of early 90s. To early 2010s, okay? So this is the population. If you make a guess how much of that contributes to the current population of the world, it will be roughly around 40%, okay? So that is a population which owns money, because we are starting to earn, like people like me, or let's say people like 90s, they started earning money and it's part of their jobs, and people like you who are going to go to jobs now and start earning money. And an interesting fact is that you're going to inherit a lot of money from your Generation X and baby boomers, okay? So that means we have 40% of the population, but this population will control almost 65% of the wealth in let's say, coming period. So that is one of the key factor which is driving your fintech, okay? I see as a very kind of major driver of fintech. Now, you try and relate it to some of the big technology giants in today's world. So if you name some of them, what comes to your mind is what? Google, Facebook, Amazon, Netflix. So these are some of the names we see. Apple obviously started early. So why I'm trying to kind of get these names to you is that these names actually were founded at the same time this late millennials and the Generation Z is getting born. Okay, so now try and kind of match Google to or Facebook to this generation. So this is the generation actually who have started living this from the day one. Okay, you don't need to tell them to adopt Google. You don't need to tell them to adopt Facebook or Amazon. So they are they're quite fast in adopting these technologies versus maybe late millennials like me, early millennials like me, or Generation X. It's very difficult for them to adopt these technologies. And that is where the robustness of fintech is coming, because we have a huge population currently and in the future, which is going to change the game in terms of their expectation of what they're looking at from the financial services industry. They're looking at a seamless experience. They're not looking at the legacy experience. They don't want to go to a branch and wait there for like 2 hours and then finish their work for payments or banking or insurance. They want to basically work on the apps, okay? They want to work on the digital world. They don't even want to work on the online banking. They want something more. They want frictionless app experience from financial services world. So that is what is kind of driving a lot of fintech, and it can be payments, it can be a neobank. Mr. Kumar talked about various such entities, and this is all driven by one big factor, which is your population. So second point, basically, I want to cover is technologies, okay? So as I mentioned earlier, we are talking about technologies like AI, ML, et cetera, et cetera. So these are the contemporary technologies which are growing, okay? Where we are trying to kind of understand their potential. So that is what is driving fintech. So if we just take away technology from the fintech, we will not see any fintech in this world. And just to give you one example, like neobanks, Mr. Kumar talked about neobanks. So we are seeing we have almost 280, 270 neobanks across the world now. And we see almost 50 neobanks being launched every year. It's a difficult process to get the neobank license, but we see 50 banks across the world, and we have in India almost, I think, 7, 8 neobanks. So what they're doing is that they're starting with the very modern core banking platform, which is a cloud native core banking platform, okay, which is not there with our legacy institutions. To give you an example, if you do a KYC through a modern platform, it will be done through, let's say, your KYC process will be done in roughly 10 minutes, but it may take 1 day to complete it, but your legacy institution can take 1 week to do it. Okay, and they may ask you to come to their branch and complete stuff, hand over the paperwork, etc. So that is what is changing with the technologies. Just one example of that is, let's say, modern core banking, which is cloud native, okay? And it is giving some of these neobanks the potential. We talked about Starling, we have neobank in Brazil. So all of them are trying to disrupt the market by being very close to the consumer, okay? So they are able to kind of adapt and change their products at a speed which is not done by the legacy institutions. If you ask a legacy institution or incumbent to do their change in the credit card product, it may take them 2 months to do it. But if you ask the fintech, or which is based on a very modern platform, they'll do that in maybe like 2 months or 2 weeks or 2 days time or 1 week's time. So that's there the fun is coming from the technology perspective. And third point which I wanted to talk about is regulation. Regulation we always neglect, okay? We say that, hey, regulation is just part of the game, okay? But it's not like that. It's not like that. Regulation is one of the key driver of fintech industry. So we are talking about Sehmati, we are talking about open banking, which is payment service directive in European market. We are talking about real-time payments. These are regulatory-driven advancement in the financial services world. If we never had PSD2 in Europe, we will not be experiencing Sehmati or open banking in the parts of the world like India or Australia or Singapore or even US. In US, we don't have a proper regulation for open banking, but they're doing as a part of the commercial project, like the talk is about Plaid, they are kind of aggregator. So all of that is happening due to regulation, okay? So they are one of the utmost or one of the critical element of driving the fintech industry. So if they say, hey, India say, hey, we don't want to kind of open data from banks, all fintechs will go for a toss. So that is where the fun is. We need to have the regulation in place to kind of have a kind of environment where we see excelling fintechs in the market. So So with this, I would say that the population today, again coming back to the population today, it's not loyal, okay? We are not loyal population to one financial services entity. Why so? Because we are more in kind of accustomed to an app business. We are accustomed to an application business. We don't like a branch model, okay? So that's why we see the business is moving from an application, from a branch to an app away, branch away to an app away business, okay? And for that matter, I'll give you my example. I think most of you will also relate to it, is that I use 4 or 5 applications for my investments, okay? I use 3 or 4 for banking, 3 or 4 for payments, et cetera, et cetera. So we all use that, okay? And it kind of changes with the population. You kind of try to start off by kind of create a segment, you will see generation X or the early 80s will not use many, okay, or the early 70s. And you go to the 90s or like 80s or late 90s or 90s, they'll have kind of more options to use, okay? They will use that, they are adopting that. If you go to the 2000 world, they just kind of jump onto any application. They don't think about kind of changing their application just for a second. They just change it. So that's the word we are getting into with the fintech we are seeing today, and that's what is kind of infusing a lot of kind of startups in the market and kind of creating a lot of interest in the market. So with this, I had few things to talk about banking as a service, as Mr. Kumar was saying. So we see as a service model, banking, insurance, et cetera, et cetera. So I just wanted to kind of talk about one such business model, which is banking as a service, where if you just simplify it, okay, so what happens is that a bank, it happens in 2 ways, okay. So either a bank creates their own technology to carve out their offering and give it to a third party. Like Goldman Sachs, they open their API, open their data with the APIs, their processes with the API, give it to Apple, okay, ask them to offer their card to their customers, okay. What happens is Goldman Sachs, they earn 20% of the revenue, 80% stays with, let's say, Apple. So it can be 20-80, 75-25, so various ratios which are being kind of discussed between as a commercial agreement. So that is kind of a win-win situation for banks, because they can't win Apple customer at a pace which they can with the banking as a service model. So now that's one part of it. Second part of it, banks doesn't have technology, okay? Banks may say, hey, I don't have technology, what do I do? Then you go for a specialized banking as a service platform. What they will do is that they will provide you the tech stack to kind of link your platform to the third-party platform and offer your services. Okay, they will take certain commission out of it. So that is what is kind of driving a lot of kind of let's say business models. It can be banking, insurance, payments, etc., etc. Now, what are the benefits? Banks are getting revenue. Banks are getting extra revenue, and at a pace which they can't do it if they don't have a third-party relationship. Third parties, they are kind of able to retain their customer, like Uber, etc. They are kind of embedding finance into their application, not allowing the customers to leave from their app, having a kind of full end-to-end experience. Customers are getting a very intuitive kind of experience by utilizing those apps and getting at a lower cost. So everybody is benefiting, but there is one catch: banks are getting commoditized with this, okay? So we have legacy institutions like large banks, so they're getting commoditized. They are losing their name, okay? So we have, as a service platform, we don't know which bank is offering me the credit card. So, and that's where the fun for legacy institution begins. Now, they are kind of getting into partnering with a lot of fintechs, be it for their cards, be it for their accounts, lending, et cetera, et cetera. So they are trying to develop some of these things on their own, or they're trying to kind of, let's say, partner with somebody, invest in somebody, acquire certain fintechs, because they don't want to get commoditized as soon as possible. So now, coming back to my 3 drivers, if you apply to this banking as a service or as a service model, so you will realize that those 3 will fit very kind of neatly into this, okay? This is driven by population, okay? This is driven by population because we want experience, customer experience, which is intuitive and which is robust, okay? We don't want the same legacy experience. That's why, let's say, we want banking as a service. Second is, we talked about technologies. It is driven by technology. We are using some of the contemporary technologies as a service. And third is regulation. It is, if you don't have regulation to open your data to as a service, you will not be able to do that model. So all three will apply to all your models, okay? So that's the way to kind of look at the robustness of fintech in the current scenario. So I think, yeah, this is basically what I wanted to touch upon and basically cover in my kind of understanding of fintech and how it is driven. And the challenge for banks being commoditized, but for fintechs, it's a win-win situation as of now. They need to just balance their profitability and growth as we talked earlier about it. Yeah, so that's about it from my side, very crisp, very short. And at the end, I would probably say is that nothing in this world is changing, okay? But it's changing, it's changing at a pace which we haven't seen. Okay, look at the COVID world, so it's unprecedented. So what I'm trying to say is that nothing is in this world is not changing. Sorry, I said it wrong. Nothing in this world is not changing. It's changing at an unprecedented speed, and that is where what's happening with the financial services world as well. I was watching a video day before yesterday where it's about auto industry. Okay, the father is saying to the girl, "Hey, why don't you go and learn the car driving?" Okay. It will be helpful to you, you can go to college, etc., etc. The girl says, "Hey, dad, I don't want to learn this driving, etc. I'm going to use autonomous vehicle." Okay, so that's the fun of the new technologies. And if you relate it to banking, my dad may say, "Hey, Shri, go to the bank and just sign up this check for me and get the cash out of it." I say, "Hey, dad, I don't want to do it. Branch doesn't exist for me. Okay, I just do it on the app or on the kind of application or etc. on the online." So that's the way. That's the kind of change we are seeing today in the world of fintech, and we are yet to explore much more changes in this world. Okay, it's just the beginning of this kind of disruption in the market. Yeah, with this I'll just end my kind of narrative here. Thank you.
Thank you, sir, for sharing your valuable views with us. Moving ahead, I would like to say that we are delighted to launch Nivesh Marg, the annual finance magazine, and also the first edition of Life, LBSIM's Insights on Finance and Economics today. Nivesh, the Student Managed Mutual Fund Investment Society, was formed in the year 2014 with an objective to provide the students of LBSIM exposure to the world of investments by developing practical investment skills and test them in the market. I request Professor Praveen Gupta, Professor GL Sharma, Dr. Pankaj Vashne, Mr. Manu Kohli, Mr. Kumar Manish, Mr. Sridhar, and Team Nivesh to come on stage for the launch of the magazine. Thank you, Team Nivesh. I would request the dignitaries to please stay on the stage. FINES is the club of finance enthusiasts. Its objective was to nurture and enhance their financial quotient and to foster an environment that encourages a culture of continuous learning and application. I would request Team FINES to join the dignitaries on stage to unveil their magazine. Please. Thank you, everyone. Now, I would like to request Professor Praveen Gupta to kindly felicitate our honorable guest, Mr. Kumar Manish, with a token of our appreciation. Please, sir. Now, I would like to request Professor G.L. Sharma to felicitate our honorable guest, Mr. Sridhar, with a token of our appreciation. Please, sir. Thank you, sir. Now, I would like to invite Professor G.L. Sharma to kindly deliver the vote of thanks. Please, sir.
Very good afternoon. It's a matter of pleasure for me to propose a vote of thanks to our chief guest, Mr. Soni, then Mr. Kohli, Mr. Sridhar, and Mr. Kumar. Really, for me, some of the terminology that they've used, it's very difficult for me to describe. I'm an old man, and I believe in trust. And if trust is broken, everything is gone. Fintech, different authors have described, finance and technology. Of course, in using technology in finance as compared to other Western countries. And I personally believe, had not this pandemic 2019 taken place, probably we would not gone for technology, particularly in finance. Because finance, as you know, it's a very difficult word to describe. And finance basically means, even today, 200 years back or 400 or 500 years back or times to come, it always remain crucial for any development, any kind of development. Whether it's a personal development, whether it's a family development, whether it's a area development, or it's a national development. So finance has to be taken very seriously in all matters. It's immaterial who is using that particular money, who is using that particular finance. So it's very difficult now, even today. As I said, had this pandemic not happened, things would have been different. And now, whether you use the technology, whether you use technology in finance, whether you use technology in any field, it is very difficult to survive without making responses to what is happening. Because ordinary man, as many authors, speakers have pointed out, this smartphone is so important that any moment, any time, illiterate person who doesn't know ABC of English or any language, he can tell what is happening. So now, time has come when you have to depend and you have to be cautious what you speak or what you do. Because to me, different technologies being used for different purposes. And technology, basically, they are using not for common man, not for ordinary people in the country, but for self-development. And moment, I don't want to quote various political parties, individual, here in the country or all over the world, but the moment self-interest is served, people disappear. Now time has come when you have to deliver, and when you take into consideration that this particular situation is developing, then naturally you have to take into consideration where you have gone wrong. You just can't avoid now. You can't just avoid, you can't run away now, because things are so tight. Everywhere, things are so tight that it's very difficult for any individual to escape. Particularly our chief guest, Mr. Soni. I'm glad that he is open to various problems that that is happening. Now, he described one important word, sustainability. And every newspaper, every platform you go, you will find sustainability, discussion on sustainability. And this sustainability to me is that you do a thing which can take into consideration what is happening on the ground. You take those factors, and after taking those factors, you take into consideration that you have to take action so that it can be continued, it can be sustained for future. And not for future development for any individual, but action for large community. And that sustainability will also take into consideration that there are various competition, and you have to stay in competition, so you have to take into consideration that stability is most important, that you can survive for a longer period. And if you are not in a position to survive for a longer period, then it's your technology you are using or anything steps you are using, it's a temporary phase. We used to describe earlier management by objective, then we use it management by obstacle, and now this word is used management by hovering around. घूमते रहिए, डराते रहिए लोगों को, जिससे कि now this kind of concept, hovering around, is creating a lot of problems, and time is not far off when these people will be nowhere. So I'm glad and I'm happy to thanks Mr. Soni, Mr. Manu Kohli, who has described various techniques very beautifully, and also Mr. Two speaker, Mr. Sridhar and Mr. Kumar. Sridhar, particularly I see one important factor that you brought, the population. Because population is a crucial factor for any decision. If you do not take population into consideration, you are nowhere. And population is changing every time. And population you take into consideration according to your objective, for which purpose you are taking this step. So which population, which area you will feed, that's very important. Mr. Manish has used very important factor, and he used the very value to the successor, that the new entrepreneur, new companies come into light, then what is the value you have to take into consideration. So apart from these four experts they have described, my personal view is that please take finance seriously. Technology that you are using depend on your resources what technology can use, because if you do not have a lot of money at your disposal, you can't use artificial technology, artificial intelligence. You can't use robust. Machine learning you can't use. So you have to use technology according to your resources. And at the same time, not only resources, what objectives you have laid down. If you lay down a particular objective to achieve, take different factors into consideration, including regulation, which is very important, and at the same time, take into consideration that this technology or finance or technology plus human behavior or human resources, how these will change if it doesn't happen. I do not want to tell countries recently, but you have seen that the Ukraine-Russia war is going on. Most suffered people are those in the Ukraine country. We are suffering in the sense that we don't get petrol, cheap petrol. We don't get a particular thing cheap. that is different story. We don't feel any disruption. But definitely take into consideration when you start any project, what will happen to your neighbor, what will happen to your partner, what will happen to your village or surrounding, or I use the word population. So that's more important. So these words I congratulate and I thanks for speakers, and at the same time I'm also very happy that this magazine we started probably 2014, going on regularly. I'm glad that the tradition is going on, and this another LIFE, probably this is finance economics. This is the new magazine. So I congratulate the student, editor, contributor of these two magazine of Lal Bahadur Shastri Institute of Management, and I hope the best thing would be, as I have been pointing out for a long time, that if you are really interested in something tangible benefit to your career or to your institutions or to your community, please go to local area, some village, collect some information, basic information. And since you know the principles of management, you know the technology, so use that data for deciding or designing a new strategy. Because what personally I feel, and if you see the entire universe or entire country, the gap between haves and have-not is increasing very fast. And this gap is not useful or not beneficial for the country as a whole, because there is a time when the gap becomes very wide. There is every possibility that there will be a situation, a very serious situation. And people who do not get anything may revolt against you. So taking that into consideration, the students of Lal Bahadur Shastri Institute of Management, I advise you to collect information from small areas. As one PwC gentleman pointed out, population. Use for that population for deciding, designing your proposal, designing your project, and then communicate to those people to whom from whom you get the information that with your data, I have come to this conclusion, so that the gap, have and have not, is minimized as far as possible. Otherwise, it will be disastrous. So I express our thanks to the chairman, Sri Anil Shastri. He is available online, so we thank him also, and we thank the team led by Mr. Anuj Pankaj Varshney and a team to organize this whole day conference. Thank you, thank you, thank you.
Thank you, sir, for delivering the vote of thanks. With this, we conclude today's inaugural first technical session. Thank you all for being a wonderful audience. We now request all the dignitaries, faculty, staff, and students to proceed for the lunch. We will commence the second technical session at 2 p.m. in the auditorium. Thank you.
The most difficult thing is the decision to act, and the rest is merely tenacity. Rightly said by Amelia Earhart. Good afternoon, everyone. On behalf of Lal Bahadur Shastri. Check. The most difficult thing is the decision to act. The rest is merely tenacity. Rightly said by Amelia Earhart. Good afternoon, everyone. On behalf of Lal Bahadur Shastri Institute of Management, Delhi, I, Ritik Tiwari, student of PGDM Financial Management, would like to welcome you all to the second technical session of the conference. Now, I would request Dr. Pankaj Varshne, Dr. Gautam Negi, and Dr. Anuj Verma to kindly take their seat on the dais. Please, sir. Thank you, sir. I would like to take this opportunity to introduce our first speaker, Mr. Aditya Murthy, Vice President, Digital Partnerships, South Asia, MasterCard. He is a seasoned business leader with 21 years of experience in business development, category and partnership management. Mr. Murthy's professional experience include business leadership roles at Hewlett Packard, Samsung Electronics, and Amazon. He is an alumnus of Lal Bahadur Shastri Institute of Management and holds a postgraduate diploma in marketing and finance. Mr. Murthy has led teams delivering sustainable business growth and profitability across retail, e-commerce, and payments. He has played his part in growing and rapidly scaling the branded offline retail and the e-commerce space for large categories including smartphones and accessories. At MasterCard, Mr. Murthy leads the digital partnership for South Asia and is responsible for powering startups, fintechs, and digital majors with the best-in-class MasterCard payment technologies. Mr. Murthy will be delivering his address on digital payment and fintech ecosystem. Sir, it is an honor to have you today. Now, I would like to request you to address the audience. Please, sir.
Thank you very much, Ritwik. If I heard your name right, it is indeed an honor to be present amongst my own. I feel this is a homecoming for me. But before I start out, I'd like to thank Professor Gupta, Director, Professor Pankaj Varshne, and Smita for helping create this opportunity for me to be able to speak to all of you today. So thank you very, very much. And before I kick off my presentation, which is Professor Varshne has, very astutely put me at 20 minutes. I have to seek blessings of Anil Shastri ji and Dr. Sharma if they're in the audience. My pranam to them, and I seek their blessings for their innate guidance that I've always received from them. As we roll out, I have my colleague Ivanka who will probably just get our presentation rolling, please. quick word, if you guys can see my presentation, are you able to see it? If I could hear one of you say yes, then I'll roll.
Yes, sir.
Okay,
It is visible.
cool. Cool. Thanks, Siddhant. So a quick start to where we are. I'm going to be talking about the challenges and trends in the Indian fintech ecosystem. I think it's a great topic. I think many congratulations to folks who have chosen this topic, because I think it's highly important that over the next 2 to 3 years, this is going to define where our country is going to be. So I think very, very good choice. A quick kickoff to where we are. Okay. Before we talk about fintech, it's very important to understand where we are. Irrespective of what growth rate you see of the Indian economy in the papers every day, you'll see different numbers between 7 to 9. But the most important piece to appreciate is that the World Bank had put us at 9.2%. There are GDP estimates ranging from 7.3 to 7.5, and these will keep changing. The single most important thing which I want all of you to carry home with you is that irrespective of what decimal point in front of 7 or plus or minus of 7 we are, the next 3 years are going to see spectacular growth rate. And I will speak about it a little more as we progress. On your right, that's on your left. On your right, what you will see is the nominal GDP. You will see our PFCE and our retail. Now, the most important piece to understand is that all of these have weathered a very, very harsh COVID 2 years. And still, most of them are projected at, if you take a 5-year time frame, all of them are probably in excess of 10% growth rates. So clearly, India's time has come. India's economy's time has come. And therefore, what is the government doing? The government has set about its agenda for a $5 trillion economy. Now, there are a couple of areas that the government has identified. Now, this is not just social causes. This is about something that they can scale significantly. This is something that can add wealth to the country. This is something that can, really change the lives of people in our country. Amongst the 5 things that they have chosen is digitization of payments and ease of credit. The Prime Minister has been speaking about it over the last 3 years, and his most recent address had this as one of his pillars. So off the bat, it's very important to understand the biggest investor in the country, the government of India, is investing in this space. So if you have the biggest investor investing in this place, you've got the first green light for you. So we've got commonsensically, we will probably have the best policies. We'll probably have the government is focused on this, and the government looks at this as a place which will take our country forward. I think that is fundamental to what we're going to talk about. Where is the fintech ecosystem today? We are at $55 billion in market size, and this over the next few years is going to scale to $150 billion. As I progress in this presentation, I will also show you that this is not unique and this is not alone. There are many things that are happening in this country, and that's why you have such a stupendous growth rate. People can debate this growth rate. You can say, hey, this will not happen in 25, this will happen in 26. Or might I say, there may be people who might say that a significant component of it might happen by 24 as well. That is not the question. The question is, there is no other country in the world that is seeing such growth rates in the fintech ecosystem. India is already the 3rd largest globally. Now, what's powering this growth? Couple of things. As I had mentioned in my early comments, that there are a lot of other areas also where growth is happening. The smartphone and internet penetration has been one such pillar over which many services have been built. I'd also like to stress upon the fact that we're amongst the only few countries where not just mobile telephony is growing, but even broadband internet is growing. You will never find this. You've got almost a high single digit or a double digit growth rate in broadband connectivity in our country. And as you know, over the years, speeds and data packet sizes have only increased here. So therefore, while the costs have remained controlled. So all in all, this is a huge pillar. There are a couple of other areas that have powered it, including evolving consumer behavior. There's been a significant change during the COVID timeframe, but without going much into the COVID timeframe, I think the Indian consumer has been evolving over the last 5-6 years, and I've seen this in my various roles. I was at Amazon, I've seen it there, I've seen it before when I was in Samsung. So I can tell you for sure, over the last 10-12 years, the Indian customers, his preferences, his decisions, his choice. Different digital behavior has been seen enabled because of the COVID environment. There is foreign direct investment. There are significant changes to regulations. The regulator for the finance world is obviously the RBI, but if you see all the other people in the government organizations like Niti Aayog or DIPP or Competition Commission of India, everybody has been doing their bit to enable and power large growth. And in this large story, Indian digital story, the fintech story is something significant. On the right side is something that's been spoken about quite a bit. And, there are 12 unicorns which have happened. The point that I want to draw your attention towards is the bottom. There have been 280 deals with 8 billion funding, which has been raised between 2021 and 20. So you can see with significant flows coming into this space, this pyramid is only going to become bigger. Might I say that 12 unicorns is probably amongst the lowest years that you're going to see over the next few years. So the broadening of this base is going to lead to the broadening of the top. And yes, it is a status, the unicorn status, but this entire pyramid is going to become very, very large and driven by what's below. Within this space, there are a couple of spaces that are already showing early signs of growth: lending, insurance tech, neo-banking, wealth tech. Yesterday, there was this RBI guidance that's come on digital banking as well. So there are a couple of new spaces which are powered by policy, powered by startups and innovations by startups and fintechs. And all of this together is leading to output. So you've got consumers with mobile phones enabled. You've got a set of young entrepreneurs and engineers who are hacking their way to glory and trying to build solutions for the new India. You've got an enabling environment with policies, and you also have a fair bit of investment coming into this space to power people's dreams. So I think all of it is leading to the outputs that you see on the screen. This funding increase, can also be read in the following way. The sheer increase in the graph on the left side will tell you what's happening. And I expect 2023, 24, 25 to be significantly large. In short, if any of you in the audience are going to take a punt and, maybe head out, do a startup of your own, or maybe seek employment in this space, I think this is a great place. It is a great place because it needs young minds. It needs people who can make things happen. And, you can see it on the screen. The investments are available. Plus, this place seems to be on steroids on a lighter note. There is payments, there's digital lending, there's insurtech, there's wealth tech, and there's new banking. All that you see here today are already large firms. You will see all of these growing, and you will see many more large firms coming up in the next 3 to 4 years. The time cycle for firms becoming very large in this space is very significant. Is not so significant. In a time frame of 2 to 3 years, you can be on this slide. You can be amongst the big firms, and that is primarily because of the enabling technologies that are available and the enabling solutions that are already available. So you can pick and choose and build your own. So one message that I would probably want to give everybody in the audience today is that, this is a time when you can seek employment or you can do your own thing in this place. And, there's a significant growth wave happening here. So, this is something that should not miss your eye. There are a couple of other places that are growing. There's social commerce that is growing. Before I go into social commerce, I just wanted to stress upon one facet that Indian e-commerce, which is predicted, which is estimated today at around $55 billion, is also going to grow to around 120 billion to 150 billion in the next 3 to 4 years. And this is a given because pre-COVID, we've almost touched $65-70 billion. So the minute all lockdowns and all of this returns to normal and normal things start in our country, you'll see e-commerce at around $65 billion. Current market size headed to 120 to 130 in the next 3 to 4 years. Within that space, you have social commerce, which has already started taking off. It's at $1 billion. This is projected to be $16 billion. Please understand, by the time this reports were printed, I assure you that by this year end, all these spaces will be at $3 to $4 billion. And significantly, firms which are going to dominate this space are already there. Some of you might have heard of firms like Meesho, etc., which are there in the social commerce space. In addition to that, a very important facet of the social commerce enablement in India is that it's going to power 40 million SMEs. So a large number of SMEs have anyway started using e-commerce thanks to all the Flipkarts and efforts of Flipkart and Amazon and trying to get people onto platforms amongst other platforms. But social commerce will connect faster, will be phone enabled. It's an ecosystem that's built for phones. So you will find large number of customers using it, tier 2, 3, 4 in India using it, and you'll find merchants across the ecosystem doing it. A selection of items that will sell on social commerce will be very different. You will have cosmetics on one hand, and you'll have localized achars selling in states where they have certain demands. So there's going to be localized demand for localized products, and this is not internet. I'm not talking of aggregating demand from outside inside. I'm saying aggregation within small towns and small cities. It's going to happen. So think of tier 2 towns in India. Think of commerce between these tier 2 towns without the tier 1 towns. All of that is going to get powered by social commerce, and people will adopt it much faster. There is digital banking and neo-banking, which is very, very important. There is a recognition that one has to look at how data has to be used, how data can be aggregated. And there are a couple of policies, enabling policies that have come in this space that are going, and especially the account aggregator framework, etc., that are going to really power open banking. As far as the new banking space is concerned, people recognize that there is a need to also not have the physical structures and people to be able to seamlessly do banking on the internet. And there is tons of action happening here. All existing banks are working. There are also a large number of digital banks that are already working in this space. There's also a policy that has come out yesterday. So you can imagine from the time that I made this presentation for all of you, the regulator has already come out with a policy over this space. There is also the rise of super apps in India. Some of you might have heard about the launch of Tata Neo, NEU yesterday, that's a super app. Everybody is trying to aggregate, but what's important to see is that all these services that you see on your screen, all of them end on a payments page. Everybody needs payments. Everybody needs small ticket loans. You will also have other spaces like BNPL, etc., which I'll talk about a little later in my presentation. But some of these things, all of this is going to end on payments pages. All of these will need the support of fintechs, either to do end-to-end or to support these large organizations going live. So there is a plethora of opportunities that are here. On the left, you have a quick recap of where we are right now and what's happened in the immediate recent past. You can see the couple of grid lines. These represent the number of transactions across the leading apps in the country, leading payment apps in the country. There's Google Pay, there's PhonePe, and there's Paytm Payments Bank. It's important to appreciate that from a period of, this is from November 20 to Feb 22, you can only see the gaps increasing and all the three firms growing to higher levels. So, and why are they going to higher levels? Because they're getting new customers, they are getting new use cases, and they're providing a convenience on the phone, which people like. Fundamentally, when you like a service and you find the advantage of using the service, such levels of adoption happen. All of these have been built on the great work that's been done by NPCI, as well as a large number of phone networks. Don't ever forget the phone companies who sold smartphones. Don't forget the network companies who laid the 3G, 4G, and now the 5G networks. All of this is powered on all of that. Don't also forget the large initiatives which have been taken in the past, like IMPS, based on which most of these tech stacks work. To your right, you'll see BNPL. I think some of you would have already read a lot about it. Buy now, pay later. is a financing solution which is going to grow big. This currently in India is under 3 billion. Over the next 3 years, it's going to be around 10 billion. Tokenization is a very important component. Very simplistically put, it takes your card credentials and protects it so that people don't misuse your card number. And there is a mandate to implement tokenization across the entire ecosystem. The regulator wants to protect. So as the ecosystem grows, bad actors also come about, and therefore such mechanisms to protect consumers is very, very important. There are steps that are happening around cyber security. There is a data privacy bill that is already being tabled in 2019, and there is a new one that's coming up. I think there are already parliamentary discussions underway in this space. The important piece being that the government recognizes that individuals' data is very, very important and is taking all steps necessary to protect, while at the same time keeping adequate margin for growth to happen. So consumer is protected. We create a safe environment for transactions, safe and stable environment for transactions to seamlessly happen, and an environment where innovation happens with startups. So there are tons of work happening in all these spaces. You will, over the next few months, be hearing more on the crypto and CBDC space. There are early mentions of it in our budget this year. There is ONDC, that's the Open Network for Digital Commerce, which, as people claim, is the UPI of e-commerce. So that is going to happen very soon. The open banking and account aggregator framework, something that I alluded to, which makes data easily and seamlessly available. There is digital lending. And then subsequently, there is also the open credit enablement network. Now, it's important to understand that all of these things are happening in tandem, in parallel. Some will be ahead, some will be behind. But each of these things are making life convenient for individual consumers like you and me, and also making life very, very convenient for small merchants. And therefore, the country is going to see significant digitization of payments over, and might I repeat, significant digitization of payment services existing as well as new types. So there is this other aspect. Last but not the least, India is a very large country. We have a couple of challenges, infrastructure and connectivity. To seamlessly provide all corners of our country the same levels of service and the same set of solutions is not going to be easy. You can see payments, lending, insurtech, all of them are in different phases. However, what's important is that everybody has embarked and these have embarked on the journey to scale themselves. Now, the important piece here is to appreciate it's not all infrastructure the way we think of it. Organizations also have to change the way they do business. We also have to look at our tech stacks internally to be able to enable services. So it's not just public infrastructure. It is public infrastructure, it is public-private infrastructure, and all of it together to be able to deliver seamless service. So I think that's one piece. Financial literacy, I think, is a significant piece that needs to be fixed. And I think there are a lot of efforts underway, but there is a scaling of financial literacy. As you can see, a large number of people use wallets and apps. So I think with that, there is a glass ceiling that's been broken, but I think there's lots more that can happen here. Cyber security and fraud, I think, is an area of significant importance where I would probably go to the extent and say that we've not got started down this road. But I think with us scaling over the next 2 to 3 years, you'll see a lot of effort happening here in the country. Ensuring that services for banked and unbanked population is the same. The unbanked population also should be able to sort of get the same type of services. And the seamlessness of this service, it should not be a tier 1 service. It should be something that even if you go to a tier 5 and to whatever literacy level, the unbanked population also has to be brought on board. And I think there's a lot of effort happening there. As you would know, the government has been trying to open bank accounts for the unbanked population. I think that's significant. There is a lot of trust in cash, but I think we have to build the trust in technology as things go forward with more use cases. There's a very large base of new to credit customers. So there are a large number of first-time account holders, and when they start transacting digitally, this base becomes available for credit and for credit agencies to credit rate them. And once credit agencies is able to credit rate them on all sides, consumer as well as merchant side, I think you will see a pickup in dynamic lending to all of these, maybe small ticket, maybe large ticket, but all of this will pick up over a period of time, and it's very important. It's a focus area for the government. And last but not the least, an all-round onboarding of SMEs. Getting consumers to use is one thing, but also having the merchants on the other side to be enabled to accept digital payments seamlessly is when the cycle completes and becomes larger. Thank you very much. I have, I think, hit 1 minute to spare.
Thank you, sir, for sharing your valuable views with us. I would now request Dr. Pankaj Varshney to kindly felicitate Mr. Murthy with
Thank you very much, Professor. Thank you very, very much.
Thank you, sir. Moving forward, I would like to introduce our next speaker, Mr. Sachin Dixit. Mr. Sachin Dixit leads Internet Equity Research at JM Financial. Previously, Mr. Dixit has had a career spanning corporate development at Car Dekho. During his time at Car Dekho, Mr. Dixit has closed a primary and 2 secondary fundraising along with 2 acquisitions. Prior to joining Car Dekho, Mr. Dixit worked as an investment banker with Jefferies in New York, where he worked in the industrials group across various product classes, including M&A, debt and equity financing, investment banking, prop trading in European American bond futures. Prior to joining Jefferies, Mr. Dixit gained a unique expertise focused on calculated risk management while trading US and European market with Future First. As a trader, Mr. Dixit gained a strong macroeconomic insight into financial markets. Mr. Dixit did his MBA from University of Virginia, Darden School of Business, and BTech from IIT Delhi. Mr. Dixit will be addressing the audience on the topic Dynamics of Startups Fundraising and the Motivation for Public Listing. Sir, we are pleased to have you with us today. I would like to request you to share your valuable views with us. Please, sir.
Thank you. Thanks. I hope I am audible, and thanks for the introduction.
Sorry, sir, you are on mute. Sir, could you please unmute yourself? Sir, I guess there is some connection error. Could you please rejoin?
Hear me?
Yes, sir, you're audible now.
Just a yes will do. Like, am I audible?
Yes, sir.
Sure. Yeah, I can see a head wave there. So so yeah, moving on. Basically, when I talk about this topic in particular, right? I believe a lot of us have seen Shark Tank in over the past year or so, and I'll just try to see like if I can enhance our knowledge slightly further than what Shark Tank taught us about fundraising and how it's all going in. So talking about startups quickly, right? So Union government recently announced that about 2 lakh jobs were added by startups over the year of 2021, and I do realize like a lot of these jobs were at the operations or executive level, which is not really ideal for say LBSIM graduates. However, a quick sort of back of the envelope math suggests almost 25% of those jobs were in fact very, very legible for an MBA graduate as well. So that is basically implies that people sitting here, people listening to me over this call, a lot of these people are going to have some part of their professional journey in a startup. Either they will start their own, which is a brilliant scenario, or they will likely join one. Either ways, I think it's very, very important for us to basically understand the ecosystem and how exactly are things moving on here, right? So think of startups, right? There is one part of the startup where there's a founder who has a brilliant idea, who is willing to sort of dedicate a good part of his working life to building something, which is obviously going to move the needle, not just for himself or for a small community, but even for India as large. On the other side of it is the enablers. A big enabler, when you think of it, is funding, right? None of these startups, obviously in the initial phase at least, have the scale or the sustainability factor aligned enough for them to basically keep on generating sustainable cash flows and basically survive by themselves. Which means that they will need to go out and basically try to raise money from external investors. Now, when you think of raising money, effectively, no matter what level of startup you talk about, what stage you talk about, there are basically two things that are going to come into picture. The first one, which I'll start with, is basically survivability, right? Most of the math that's going into a startup fundraise effectively is how much money do I need today to basically survive until the next round of fundraise comes into picture, right? Which means that at whatever point you are sitting at, you are basically just doing a quick math of, okay, what is my operating expenses, what is the likely revenue I can generate, and the net amount effectively I need to raise. And assuming a certain time period and keeping a certain buffer, okay, let's say I'll raise money in 8 months, and instead of that, I'll probably end up raising in 12 months, which basically will imply that I'll keep a buffer of the extra 4 months, right? So thinking of from that perspective, the first thing that a founder starts to think of, let's say I myself decide to become a startup founder tomorrow, and I start thinking of how do I go about it. So I'll probably start investing some money from my own capital in the initial phase, but sooner or later I'll need to sort of pool public cap money into the startup in order to basically drive a strong growth trajectory, right? There's only a limited amount of capital that an individual generally manages to generate. And even for people who might have enough savings, like in most cases, they will obviously not try to put all their savings into just one startup that they are trying to build. There is always a sort of a diversification of risk that anyone looks at, whether you talk about a founder or whether you talk about an investor. Like everyone wants to diversify their risk to their investment. So effectively, I start a venture tomorrow. I put in some money from my own capital. Then I start raising money. To do this, the first thing that I'll need to worry about effectively is how much money do I need to raise, or how much basically capital do I need. The second thing I basically need to worry about is how much stake am I giving away, right? Capital is very simple, right? Everyone wants to raise a certain amount of capital. The tricky part comes when you think of how much stake am I willing to give away, If I give too little, obviously the investors will not be interested. I will fail in the fundraise effort. If I give too much, I will have too little skin left in the game. Sooner or later, right? It might be in a seed round, it might be in Series C round. At some point, basically there might be a very little skin in the game left for me because I have divested too much, I have diluted too much to the investors who I have gotten on board. Now, from my angle, it's very clear. Like, I want to give minimal stake. Now, think from an incoming investor's angle. What does this investor care about, right? Ideally, most people will believe that an incoming investor will want as much stake as possible in order to sort of gain benefits from the startup growing and gain the financial efforts or financial benefits from whenever they get an exit or liquidity event. However, what we miss out is that most of these incoming investors are also doing a math. Because if they take too much of the stake away from me, at some point, I'll be left with too minimal at stake, which basically demotivates me or like disincentivizes me to keep on burning the midnight oil, keep on working hard enough to make this startup becoming something large. Right? Because I'll have too little stake left and I'll not be motivated enough. I'll rather think, okay, I have gained some skill set. I know how to run a startup. I know how to scale a business. Let's shut it down. Let's leave this one and let's go somewhere else. Right? So that way, effectively, even this incoming investor needs to do a math that I should not be taking too much away from the founder. Right? So that's a very sort of a critical game that keeps on playing at every level of a startup fundraise. It is basically how much stake should I leave with the founder and as well as the existing investors if you are talking about a later stage round, or how much stake should I be asking for from the existing team of the startup. The other math that keeps on happening is basically that every investor who I have onboarded in a previous round is basically playing a game of passing me over. It's almost like I do a Series A round, there's an investor that comes on board, and this investor will basically take care of me as a startup for a certain time period, and then they will basically pass me on to a Series B investor. Obviously, the Series A investor can continue investing into the startup to maintain their stake. But effectively, it's a passing on game. The Series B guy will then spend some time with me, they will evaluate me, and then they will give me their capital. But after a point of time, they will pass me on to a Series C guy. So effectively, until the business becomes sustainable, until the business starts making money by itself, this passing on game keeps on happening. Right? And this will keep on happening. Like you might have seen companies that have become profitable after doing a Series C. You might have seen companies that might not have become profitable after doing, say, a Series H or Series I as well, right? This is all sort of the alphabets that keep on running, right? So that way, this stuff keeps on happening. Now, at some point, which is the next part of the topic that I'm covering here, comes the question of whether a startup needs to go public. And why do they need to go public, right? You have Flipkart, which is obviously they do talk about in some form or format that they are looking for a public listing, but they are like whatever 30, 50, 40, whatever $1 billion in valuation, but they're still not public. Then you have some startups which are probably $1 billion, $2 billion in valuation, and they are gunning for a public listing already or are already public, right? So why are some startups restricting? Why are some startups moving towards it? So effectively, what ends up happening when you think from a startup's angle, after a point, the pool of capital that is available to you starts drying up. After a point, you become too large for a private investor to keep investing money in you, keep funding you. Which means basically that say you become say a $2-4 billion valuation company, and now you need to raise another round. And this round, because you are large enough, your burn rate will be also higher, assuming that you are still losing money, which a lot of startups continue to do that at even say a $2-4 billion sort of valuation. So which means basically that you are looking for a check size somewhere in the $200 to $400 million range. Now, if you think from Indian startup ecosystem perspective, and if you leave out a certain sort of strategic investors, like say what Walmart did with Flipkart, what say Google has been doing with say Jio, for example, while Jio is not really a startup, but obviously it's built in the same format in terms of their digital play at least. So basically, at some point, this private capital that you can raise from the private investors, and if you leave out certain of these strategic investors out, the number of investors who can write a $200 to $250 million check in India is basically you can count on their hands. The number of investors is not very large, which basically means now if you need to tap into a deeper or a broader pool of capital, you need to go public. Right, so that's one math that is basically happening. Why these startups are going towards a public listing. Obviously, this also comes with an additional benefit, like which is very logical to think of it, is that effectively you get more credibility when you think from a regulator's perspective. You gain more of a reputation thing from a founder perspective that you have led a company to public listing and all. But it also comes with obviously a sort of extra scrutiny. And this scrutiny not just comes from your investor board or all the investor community who have put in their money into you. This scrutiny also comes from larger public, right? You would have seen examples of what is happening, say, with a Paytm or Zomato today, wherein whatever they announce at some point or the other, there is like a sort of a good amount of discussion or happening over LinkedIn. There's a good amount of discussion happening over news channels. So like, it's not just your investors who are answerable to. Now you're answerable to a broader set of public because you have actually gone public. That's what effectively the public listing brings to you. So overall, I think this sort of profit or this sort of capital dependency keeps on happening until you finally have built a sustainable business. And all the math or all the sort of the motivation that I talked about were from the perspective that the business is obviously requiring external capital. If you have become profitable, like say Zerodha has become with hardly any sort of capital raise is done, then you are obviously not part of the fundraising game or looking for capital sort of a game, right? So that's more or less on what I wanted to talk about in terms of the private or the public capital raising game. Overall, I think I'll just I'll just talk with one final thought effectively, and then we can probably open the floor for some questions if there are any. Right? That when does a founder really make money? When you think from a startup angle, right? We obviously have seen that India had whatever 41 unicorns last year, and today we are sitting on over 100 unicorns in the country. But think from a founder's angle, right? For most of these founders, obviously you can talk about, okay, they are getting 2 CR, 3 CR, whatever number in salaries and some ESOPs, etc. But when you think from the valuation and their stake perspective, on paper their net worth might look like they are billionaires, right? But how do they make real money? That's something which I'll just close with effectively. And again, the caveat being obviously that you have not sold your business, right? In case you have sold your business, obviously you can make some amount of money, but then you are not building something for the future. Then you are not building something which is going to survive for a long time, right? If effectively you have built a trading business, that you built something and you sold it and you moved on to something else, right? So if talking from an entire sort of a journey perspective, effectively a founder ends up making money only and only when the business makes money. And that's what I think most of these people talk about. We have obviously a lot of the public debate has come in thanks to a bunch of these startups coming to public markets recently, and we would have seen how the founders have been reacting to some of the media coverage they're getting. So yeah, that's where I'll stop. Thank you.
Okay. Sir, there is one question.
Sure.
Hello.
Yeah.
Thank you, sir, for this inspirational address. So my question is regarding the startup culture in India. Basically, Anand Mahindra once said that India is a land of jugaad, and there's a lot of unbanked potential in that ecosystem. And the government has started a lot of initiatives for financial inclusivity as well as for startups. So what can the venture capitalists or private players, to be precise, do to tap that untapped, unbanked potential jugaad in our Indian population?
Sure. I think a very it's a very interesting question considering where we come from, right? But the fact of the matter is, while these startups might look fancy sitting outside, but if you look at how they start or how basically they go on about doing that jugaad as well, at least in the initial part, you will notice a lot of them are actually built on basically solving for that jugaad effectively, like probably in a digital format, but effectively solving for the jugaad. I remember, I think some of the startup founders, some of the unicorn founders, without naming them, basically in the initial part of their career, they were basically physically distributing their pamphlets to their stakeholders, right? So that jugaad, I think it's very much part of Indian culture, and Indians continue to focus on basically working or building onto that. In terms of how the venture industry is doing that, effectively, if you look from a venture investors angle, while they all dress up well, they look very fancy, but they are all doing their on ground work, right? I know for a bunch of work that I have done in the fundraising piece, where people are actually going and sitting on shops. When we talk about all the kirana movement that is happening, all the digitization of grocery and all, I know a bunch of VC investors, and these are senior people at these funds, who have actually gone and sat on those stores and tried to get the first-hand experience of how exactly is the problem getting solved on ground. So I think effectively it's just a building of completely normal things, and it's a pieces like, so for example, just talking about the same e-groceries format, right? Companies like say a Paytm or a PhonePe or even say Bharat Pay, for example, right? All these companies start with the basic thing. They started with UPI in the initial part, and when demonetization hit India. But after that time, if you would have realized they continue. So after that, basically, they continued basically building onto that piece. Yeah, I can hear myself. Sorry. So they basically kept on building onto themselves, and then came the lending piece, then came the invoice discounting piece, and this is all part of the initial thing that the kirana shop owner was anyways doing. Right? He was already asking the wholesaler to fund him, or already raising money from someone local. So it's all solving for the jugaad in a digital fashion after all.
Okay, sir, I got your point. Thank you. So I have actually a follow-up question in this. Like today we're discussing on the fintech industry, and as a fellow student and a future finance professional, if I want to initiate a startup in this fintech industry, and that to tap on the metaverse, that is kind of becoming a new trend nowadays. So how do I do that? What is the process to tap the metaverse and, for example, start the meta bank or maybe metafin kind of a company?
I think you are already moving very fast compared to most of the startup ecosystem has so far moved, right? You think from Facebook's angle, they have started talking about metaverse, but effectively on ground, I think things will take their own sweet time in order for something to come up in that format, right? Because it's, after all, like, people have ideas, but sometimes the ecosystem or the infrastructure comes along, right? When we think of metaverse angle, there's a lot of virtual reality involved in it. A lot of the VR ecosystem in India is still some way out, right? Just look at all the people sitting in this auditorium, and whoever has joined on VC. I wonder how many of us have VR headsets. To start off with the initial part of that metaverse, right, wherein you are talking about that virtual reality game. So I think it's interesting in terms of that you are putting thought, and I'm certain that idea can keep on building, and at certain point you basically come to realize like where your exact fit with the society or the product market fit is there. But I mean, honestly, I feel metaverse is still some way out, at least in the Indian ecosystem.
Thank you so much, sir. I'm sure all of us learned about the challenges faced by startups with fundraising. I would now request Dr. Gautam Negi to kindly felicitate Mr. Dikshit with a token of our appreciation. Please, sir.
Thank you, sir. Thanks so much.
Thank you, sir. Moving ahead with the proceedings, I would like to invite our next speaker, Mr. Sanjoy Kumar. Mr. Kumar is a consulting partner with Tata Consultancy Service in the area of insurance risk management. He is a certified risk management professional from Institute of Risk Management, London. He has extensive insurance industry experience of over 25 years in the area of insurance, actuarial science, and risk management. He has worked with the business to develop and embed a robust stock risk management framework, developing and implementing an effective change management process. He has been involved in setting up risk management function and implementing risk management processes like risk policy, risk appetite, risk culture, corporate governance, strategic management, etc. I now request Mr. Kumar to kindly address the audience about the role of digitization in risk management. Please, sir.
Thanks for the introduction. And first, let me check out that, am I audible?
Yes, sir, you are audible.
Okay, let me share my, PPT, and then I will ask it again. So, is my PPT visible?
Yes, sir, it is visible.
Okay, and I'm audible also.
Yes, sir.
Okay, thanks a lot. And good evening, everyone. I saw that there is a lot of speaker speaking on fundraising, or in terms of the financial payments. I am slightly taking a different direction and going to speak on role of digitization in the risk management. So let's look at yeah. So what we shall do, the way we shall proceed is we shall look at the challenges. What are the challenges in the risk management? What actions are required for improvement? What are the areas of digitalization? How digitalization is helping? And how digitalization is itself a risk. So, we shall spend next 20 minutes time on these, 5 items. So starting up, that I'm very, passionate type of a risk management professional, and always, I share my thoughts, especially on LinkedIn, and there's a simple mantra, about the risk, that either you hit the risk, means that either you manage the risk, or risk will manage you, or rather, later you have to do a crisis management. And you must have seen that in most of the cases, if risk is not addressed, people are ending up doing the crisis management. This has happened, after the COVID. Risk was not addressed in advance, and what we were doing and still doing is a crisis management. So we have to be very, very careful about the risk. We don't have enough time to go into the nitty-gritties of the risk. It would have been, interesting to talk about, those areas as well. However, let's, look at some of the top reasons of risk management failures. And in most of the failures, whether you look at burst of dot-com bubble, or Enron crisis, or 2008 economic crisis, or the recent COVID, you will find one or other reason, out of, coming in. Poor governance. Poor governance, is one of the very common reason, not only just in India, but across the world, that poor governance is causing risk management failures. poor risk cultures or lack of tone from the top. That is, how does the management is taking the risk and how does they are propagating the risk management. Excessive risk taking. Excessive risk taking or too much dependent on the models. That is another problem, and this is what exactly happened in 2008 crisis. That whatever is coming out of the model, and people are just trusting it. Models are models, and the results of the model is to be interpreted very very carefully, because there is an input and there is a the machine that it runs, the engine of the model, and the output. And if the output is just trusted blindly without looking at what is the input, what is the context of the problem, then I think the problem is going to happen in the future. Lack of risk management implementation. This is one of the challenges. We should talk more about it. Lack of risk identification. We should talk about this also. That there are challenges that people are not able to even identify the risk. Herd mentality. Herd mentality is following others. It generally happen in a stock market, and if you see that most of the places wherever the people have lost money in a stock market is because of the herd mentality. Mindset issue. Things affect us. Lack of transparency, hiding bad news. Generally, there is a tendency that organizations show that all their KPIs, key performance indicator, as green. Failure to spot long-term strategic risk. Lack of risk-based decision. So we will find that many of these reasons comes out as a result of these failures. Organization suffers. And I was reading about very recently that something like 170 insurance companies failed, sometimes in 80s and 90s in US, and something similar 170 near misses in the insurance company or the failures in Europe. Many of these reasons were prominent. So I would just suggest that to keep this in mind. Since this is a fintech conference, let me just give you one flavor about despite having the rules and regulations set by the regulator, people do find ways to circumvent and create a risk. This is the news of February 16. This is a news article. And it says that there is a, I think, startup called Dhani. It is a, I think, the India Bulls own startup. And what they were doing is that they were disbursing loan, and they were giving loan by taking the PAN card of the people. Now, what the people have done is that, but also one more thing was there, the loan was going to the e-wallet and not to the bank account. So what people did that, they used the PAN card of the other people. And when they use the PAN card of the other people, so this Dhani, they were thinking that this is the right person. And as a result, that the money was going into the, into the wallet and not into the bank account. And there was no trace of the money because the person has, withdrawn the money. And in a credit report, it is against the person whose a PAN card is there. So this is kind of a fraud that happens despite the fact that eKYC norm is followed here. So that is the challenge that happens. Need to be careful about. Now let's look some of the challenges in the risk management, and if we understand these challenges, what will happen? It will help us in understanding that how does the digitalization is helping us in addressing some of the challenges. As I said, risk identification. Risk identification means one has to identify that risk is going to happen. I think one need to be slightly careful about that there is a difference between a risk and a problem. Problem is not a risk. Now the question is, what is a problem? Problem is something which is existing today. We should not call any problem that is existing today as a risk. Risk is something which is futuristic. It has not yet happened. And that's what we have to identify, that what can happen into the future. It is not what has already happened. That is not a risk. That has become a problem. So risk identification, people have to anticipate that what is the risk. So this is the first step. And say, for example, I have given an example here of COVID. In December 2019, when COVID hit the world in China, so January, so early January, if you look at, we were all relaxed. And I remember very clearly that, people in a cafeteria used to discuss about COVID in China over a cup of coffee and a tea and a lunch. They had no idea that in March it was going to hit them. What was the problem? Problem was that they failed to identify the risk. Risk was there, it was coming, it was looming large. So this is one of the big problems that, because, again, here I have, see what happens, that risk never comes on its, on its own or suddenly. The news, or you can say the smelling of a risk is always there. The problem is that we are not able to identify those smells. We are not able to, see that, the coffee is brewing and, there is a smell of a coffee, and means that, the risk is going to happen. That's the challenge, that risk, identification is the challenge. So the idea is that none of the risk can be missed, or the hidden risk, that's where, the key of the risk management is. The correlated risk. It's just, that risks are correlated, one risk to another. For example, a credit risk and the liquidity risk, they are linked together. So if there is a problem of, liquidity risk, and you are not addressing the credit risk, then it means you're not addressing the root cause of the problem. So the chief risk officer should be aware the correlation of the risk that is happening. I've already, given the example of the COVID. So at that time, the risks were highly underestimated. It was not only just the chief risk officers, but also the board, and not just in India, but across the world. Everybody failed to basically assess. A lot of papers have already been written. And still, the investigation is going on, that what has gone wrong, why the companies have failed, where are the corporate governance failures happened, why does the board has not, acted in advance, why the companies have failed, why there was a shortage of money, that, the salaries were not given. So definitely there were, some systemic issue was there. The same thing, happened in 2008 economic crisis. And as I said, risk never comes suddenly. It always, it is always there in a data. And that's where the skill of, the risk identification comes. And also one more thing with the risk identification, that it's a manual process. So the risk officer, the risk team, the people, those who are sitting, they have to, think about it. They have to see, they have to, look at, the data and see that, that, okay, which risk is getting, very important. So this is the one challenge with, with risk management, is this is a manual process. There's a tendency that it will not affect us. There's a lack of what if mindset. They are the same thing. What if mindset, that what if this happens? What if it rains for 3 months in India? How does the banking sector is going to cope it up? Do we have a plan? If we don't have a plan, then we are exposed to the risk. Risk management framework is not, it's not triggering the risk. It is not like a sprinkler system that, it can automatically handle it. It is not there. Velocity of the risk, that, how fast it is coming. If you look at an example of COVID, within 3 months, it engulfed the world. So speed of risk is very important. Another challenge, is the scattering of data, that within an organization, the data is scattered. So these are, some of the key challenges within the risk management, and we shall see that how does these challenges are getting addressed through the digitalization. The challenge, still continues, about the correlation of the risk. I have, spoken about it, and I will, there's nothing much into it. Just an example about the correlation of the risk, that in Japan, when the tsunami, happened, then how one after another the event happened, and it had, impacted the different parts in the world. So that's what about the correlation of the risk. So one requirement, which is required for a chief risk officer is to have an automated system. So they should have an integrated risk management, risk information system, which can basically, collate all the information available and give him. Currently, what happens that there is a lag of time. There is a lag of time. The information come out very slowly. That the information comes, somebody collate and then put in the form of a dashboard. So still that challenge is there. Still there are the manual processes are there. The organizations are working towards integrated risk information system. So it is work in progress is there. So this is the one area for organizations to integrate the risk information system to expedite risk management processes. What I did, that last year around September, I wanted to check that do organizations have integrated risk management system across the, across the, I would say a globe or not, because I did this survey on a LinkedIn, and I have gotten a good number of connects on LinkedIn, and I got a response across the world. It says that around 36% organizations have got integrated risk management system, whereas 74% still having got somewhat or no. So still there is a large proportion of organization who is still somewhere between automated and semi-automated, and that's where the room of improvement is there. Now, what are the action? What action is needed for improvement for the challenges that we have? Of course, we need an integrated risk information system so that chief risk officer can slice and dice the information available. Help identify some of the key sources of risk. Say for example, adverse economic activity is a source of an interest rate risk. So if an interest rate risk is to be spotted, one has to look at the economic activity. So if somebody is tracking the economic activity, then it is easy to foresee what can happen to the interest rate, what can happen to the inflation, what can happen to the GDP. So instead of looking at the exact risk, it is better to look at the sources of the risk. And that risk information system should be integrated, internal and external both. And what is now happening, this is the very latest trend across, I will not say across the world, but very big organizations are doing. What they are doing is they are collecting the publicly available information. If say one organization is doing a business in 50 countries, then they are basically integrating through the websites, through whatever source is available, all the publicly available information that is available from the website, and downloading all that information, analyzing those information, and then using it for better pricing, better management, better decision making. So this is how the data is getting integrated, and data is becoming basically the tool or a tool for the future that is going to help organizations having better risk management. So some of the key areas of digitalization which is happening currently, and I'm sure you must have heard these words like data science, data analytics, predictive modeling, big data, AI, ML, Internet of Things, cloud computing. So basically, risk management in future is going to be greatly enhanced by using these digital technologies, so that there will be a lot of application of the data which is available. using the tool like machine learning and artificial intelligence, looking into the predictive modeling on predict it. Recently, I was writing a paper on aircraft aviation risk management, and how does it it is similar to the corporate risk management. And you know that aviation industry is very advanced in terms of their safety precautions, and they are also working towards the predictive side of it. And I read that by 2025, in next 3 years time, they want to develop a predictive modeling, that they want to predict a risk in future. If, say for example, there's a chances that there could be a collision on the runway, then that that advanced warning can be given. So such kind of activity is also has started into the financial world as well. And I will not go much detail, as I understand my watch, my clock is is ticking. So which is enhancing collation of data, quick data, gathering of data, and so that you can have a better risk identification. You can have better estimation of risk. So these are the areas which is going to help in future the chief risk officers in addressing the risk management. So again, these are the same things. I will not repeat it. That it helps in understanding the customer behavior. When we use big data, we are able to understand the customer behavior, and that helps. And that helps organizations in better placing the product. Things like demography, customer segment, their behavior, lifestyle, occupation. In insurance, when this is done, this helps in mortality. This helps in lapse identification. So these are some of the areas where digitalization is helping the financial world. Upselling, cross-selling, underwriting, pricing, risk management. These are the areas of application. The last thing that I would like to touch is that digitalization is itself a risk. This is the area where not enough thoughts are going, and this can in future at times can become a very, very dangerous, similar to the COVID which is stuck. Now let's look at some of the key points. Too much dependence on technology. We are getting too much dependent on the technology. This is a concentration risk, dependent on electricity. If electricity is gone for 8 hours in India due to whatever reason, everything is down. The plane cannot land. The operation cannot be performed. This is a risk. Digital connection provide a quick access, but its disruption can stop the entire economy, like aviation, banking, ship movement, hospital. Digital war. This is something can happen in future. It does not require to fight on a battlefield. Easy to have a global shutdown. Have you thought about it? There was a global shutdown in COVID for 2 years. There can be global shutdown in a minute. After a few generations, people will forget the manual system. I think once my son grows up and his children comes, they will not know what is a manual system, how does it work. Even it will not even be documented. And if there is any global shutdown any time in say 23, they will not know what to do. The risk of cyber attack is already there. Now question is, should we go back to the manual system? I don't know. At least debate should be there. If global shutdown like COVID, how to address them. I think that's what from my side here. And yeah, I will I'm open that I can take the questions, sir.
Well, sir, we don't have any question right now.
No questions?
No, sir.
Okay.
Thank you, sir, for imparting your knowledge to the audience. I would now request Dr. Pankaj Varshney to kindly felicitate Mr. Kumar with a token of our appreciation. Please, sir.
Thank you, sir.
Thank you, sir. Moving forward, I would like to introduce our next speaker, Mr. Syed Arif Aswi. Mr. Arif is a fintech sales and marketing professional with near to 20 years of experience in the converged space of payments, digital lending, and telecom. Presently, Mr. Arif works as head of enterprise sales at Fi Commerce, which is an online payment gateway company. In this role, Mr. Arif's task is to acquire large enterprise clients from BFSI, e-commerce, and gaming, etc. for his company. Prior to Mr. Arif's present experience, he had worked at Neo Growth Credit, Vodafone, and Reliance Communications. Academically, Mr. Arif is an MBA from IISWBM Kolkata. I now request Mr. Arif to kindly address the audience. Please, sir. Sir, you are not audible.
Okay. Am I audible now? I'm so sorry.
Yes, sir.
Yeah, so thank you so much for the kind introduction. My gratitude to your college, your institute for inviting me. It's a great privilege. And my thanks to the distinguished faculty at your end and my affection for all the students. So on one side, it's a great pleasure. And on the second side, it gives me immense satisfaction as well, because when I look back at my college days, I was definitely not the guy who would attend a finance conference. But thanks to my pedigree in fintech, now I'm attending a finance conference. So it gives me a lot of good brownie. So thank you so much again. Now, the topic that I would be covering in this chat is it is deducting money from your bank account or your wallet or your credit card, debit card, etc. Getting the transaction approved by the payment network, which is Visa, Master, RuPay, etc., and then getting the money transferred to the merchant. So functionally speaking, payment gateway stroke payment aggregation is the entity which connects all these dots. So that's the technical, so to say, speak about payment gateway. Now, I'll go slightly technical here, and then I'll go more on generic terms. So which are the typical entities which operate in the payment aggregation, payment gateway business? So on one hand, you have the guy who needs the money, the seller. So for example, let's say Amazon. Like if you're buying something from Amazon, then Amazon is called the merchant. Then you have the payment aggregator. So for example, many a times you would do an online payment transaction and you would find a bill desk or a Razorpay or a PayFi or a cash free and so on and so forth. So that's the payment aggregation company is what it is. Then behind the payment aggregation company, there is a bank which is called acquiring bank. Then I'm sure all of you would be using cards. So you have Master, Visa, RuPay, these are networks. So what payment gateway does is that it connects all these entities as well as the issuer side. So for example, let's say you have an ICICI Bank credit card. So ICICI Bank is the issuer bank here. So payment gateway essentially connects all these dots. These are definitions, issuer. So once you work in this space, you would come across these terms, issuer bank. It essentially means, the bank of which the card you own. And acquiring bank is the bank behind the payment gateway, so. And network essentially Visa, Master, Rupee. So that's the technical which is here. Now, coming to in the Indian payment gateway business, who are the major players? I'm sure you would be aware of the big names. Recently, some months back, there has been a big major merger which has happened in India between BillDesk and PayUmoney. So largest online payment gateway companies. So in India, it has merged with BillDesk. BillDesk in itself was one of the largest payment gateway companies in India. So besides that, you have Razorpay, you have Paytm, you have Atom Technologies, you have our startup PayFi, you have CC Avenue, Cashfree, etc. These are the major online payment gateway companies operating in India. Now, comes the a bit of interesting part. So, for example, how does a company decide which payment gateway to choose? So this is something which might be of interest to people who are looking at careers in, fintech or careers in online payment gateway. So how does a company decide? So for example, let's say tomorrow Lal Bahadur Shastri Institute of Business Management decides to take a new online payment gateway, or say Aditya Birla Group wishes to take a new online payment gateway. What are the things they look at in that? What makes them decide on to choose one versus another? Now, many a times when you do online transactions, there are instances when you struggle with failures. You struggle with the time that it takes to complete a transaction. So success rate of a transaction is one of the very key parameter which enterprise looks at while choosing a payment gateway. So that's a very important factor. Then there is a cost involved. So for example, when you, as a consumer, when you do online payment transaction, there's a cost which is involved. Now that cost is borne by the person whom you are paying to. So many a times companies can take decisions basis cost. Now, there are also elements of treasury here. So for example, let's say, I hope I'm not trying to make it too complex. So, but those of you who would have worked in banking or somewhere, they'll have some idea. So let's say, for example, enterprise, a company has taken a loan from Axis Bank, and Axis Bank has told them saying you can take a gateway only from this company, for example, for whatever reasons. So there are treasury driven reasons as well when a company chooses a particular payment gateway. Now, more than that, there are other factors. So for example, let's say a university, say a typical example is say Lal Bahadur Shastri Institute. It will have people who will be coming online to make a payment. It will have people who will be going to visit a bank branch to make a payment. It will have people who will come to the college to make a payment at the teller. So many a time in such instances, they would look at a omni-channel presence, something which resolves all the problem. It can resolve the offline payment problem. It can resolve the online payment problem. It can resolve the cash problem. So these are also decisions which are important. Then many a times the global multinationals look at their global partnerships. So for example, companies which are working with Adyen globally would prefer that they work with Adyen. Companies which are working with PayU globally would prefer working with PayU. So these are typically on a broader side, at a macro level, factors which make a company or enterprise client choose an online payment gateway. Now I'll talk a bit about what are the industry specific needs in online payment, rightly from a corporate perspective. I'm not getting into micro needs at this time, but more from a macro perspective. What are the things which are happening in industry? So first industry that I'm going to cover is say lending. So if you look at typically loans, In the good old days, I mean, of course, college students, I'm not sure how much they would be knowing about loans, but typically, we used to give cancelled checks and so on and so forth. Now you see a great movement towards e-NACH, wherein a NACH is debited directly from the customer's bank account at a fixed frequency. More and more banks are participating in it. There is extension from it just being restricted to savings account to also getting extended to current account, so on and so forth. So NACH is coming up as one very big driver in lending business. Also, besides NACH, if you look at the new age fintechs, so for example, when you move away from the traditional banks, say companies like say Early Salary or even MobiKwik, Paytms of the world, those fintech lenders who are not dealing in large tenor, large ticket loans, they also allow customers to, make a payment before the NACH. So payment gateway is also coming up as a good, upcoming instrument in this segment. If you go back, say 5 years, 6 years back, we didn't have these things, but in lending now we are witnessing very strong trends. If you look at the growth of online payment business in India, at least from a large enterprise perspective, which I represent, lending is coming up as one of the big segments. The second segment that I'll cover is e-commerce. E-commerce essentially, as a student, many a times, we just look at the consumer side, what the experience is. There are also regulatory challenges which are there in e-commerce business. So, for example, if you would be knowing, the RBI had asked for payment gateway and payment aggregation licenses. Everyone needs that. Anyone who is dealing into payments or anyone who is dealing into marketplace. So you have entities like Amazon, Flipkart, Zomato, Swiggy. All these companies are now bidding for a PAPG payments aggregation stroke payment gateway license. So that's also a very big change which is happening in the industry. Now, those marketplaces which are not as big as Amazon, which are not as big as Zomato, which might not want to get into a regulated space like payment gateway, so they opt for an external payment gateway. So that is one big change that we are seeing. And when it comes to e-commerce in India, it's not only B2C e-commerce which is growing. You have a big component of B2B e-commerce which is growing. You have a lot of large B2B retail chains. For example, Elastic Run, you have Udaan. There is a huge list. In every segment you would have, even in industrial goods, you would find a lot of e-commerce, which is happening in the B2B space. So that's also a big change that we are seeing in the payment space in e-commerce. Now, third point, it is something which will be sort of, it was a learning for me. I'm not very old in payments, like 2.5 years old. In insurance business, we as a gateway, we work with HDFC Life, Shriram, Bajaj, etc. Now, we found out that in insurance companies, typically they use a lot of gateways. Like, for example, one insurance company will have 10 gateways or 12 gateways. So the number of gateways they keep is very high. And so one learning that we felt is that, say, for example, if you look at Amazon, you go to Amazon, there is one UI, one UX, you just have one app and you do a transaction. But if you were to buy insurance from, say, ICICI Prudential or HDFC Life, it's complex. You can visit a branch to buy, they will take your details, underwrite it, and then tell you what is the premium value. You can meet an agent who will further go to his boss or to a branch. You can go to the website. So there are multiple channels through insurance is sold. Every channel has a different consumer journey. Now, when the consumer journeys are different, which means one size fits all payment gateway does not work. So insurance is a classic, use case wherein you have multiple consumer journeys. And for startups, it is relatively easier to penetrate, because you can crack it, much faster. So if some of you who want to work for online payment gateways in business development or in sales in future, so it's a very exciting segment to look at. Now, one very interesting segment which is coming up in payment gateway is gaming. Now, I personally do not play these games, okay, but I doesn't mean, I mean, it's like booming in India. When you look at an Android phone, you would find many film stars, the A-listers, as well as the B-grade film stars advertising about gaming things. Now, if you look at all the ads, they talk about paisa jaldi aa jayega. You know, money will come very fast. So, for example, if you are playing with say 100 rupees and you're winning say 70 rupees, the 70 rupees will come very, very fast. That's the premise on which a gaming app is being sold on various platforms. Now, for them to pay instantly and for them to collect instantly, for them to give a good user experience, they need, of course, a good payment gateway. So that is also a very, very strong booming segment. Now, as I mentioned to you, as they reflect in the ad, they want instant, the reward should come instantly. So, which means typically what happens in payment gateway is that if you do an online payment gateway transaction today on Amazon as a consumer, Amazon will get money tomorrow. Typically the banks transfer on a T+1 basis. But gaming is such a business where it is coming up, is they're talking about instant settlements because the money needs to go to the app instantly. And from there, it needs to go instantly to the consumer. I mean, the person who is playing the win. Because there's a trust deficit or whatever it is, I do not know. I'm not, a typical consumer behavior guy here. But yeah, people do not trust it. They want their rewards instantly. So this is also a very, very booming segment which is coming. So these are the sort of new exciting categories, which I thought I should touch upon. Besides that, some of it is well known to all of you. What are the new trends which are happening? There's a lot of media hypes around UPI. Now, UPI typically in a sub 2,000 transaction value, it's contributes to, typically we have seen, of course, with merchant wise it varies, but typically contributes to as high as 40 to 50% of the overall transactions. Now, I think maybe some of you will know that UPI is a subsidized payment instrument in India, which means no payment gateway can charge the merchant a transaction fee for it. It's free of cost. So on a revenue side, it's tough for the payment gateway because you do not get any revenue from doing UPI. But that's what is dominating the payment, sort of system at this time. Now, if you remember, on 31st December, we saw a tweet from Deepinder Goyal of Zomato saying these UPI success rates are as low as 40% today instead of normally 70%. Now, so although UPI seems very seamless, for example, when you go to a Kirana store, pay, by scanning a QR, it's very seamless. But when you look at macro, it's still a lot of battle needs to be won. For example, you have, most of the transactions are happening in mobile devices. So many times the UI is not very, conducive to the consumer's need. Many times the way we send UPI collect requests, these are not very good experiences, as a result of which UPI success rates are typically low. On many of the apps, we see that they've won saying UPI success rate is low at this time. But also in that, despite all the challenges, UPI continues to dominate the entire payment transactions. Now, another very recent factor over the last few years is BNPL, buy now, pay later. We see a good amount of companies like Zest Money, you have Instacred, LazyPay, etc., which is coming up in BNPL. For the paucity of time, I do not want to cover more about that. So, that's it from my side. I mean, I suppose I'm finishing my time. So if you guys have any questions, you can ask me. I mean, it's already 3:35, so I don't want to take more time.
Thank you, sir.
You're welcome.
Thank you, sir, for imparting your knowledge to our audience. I would now request Dr. Gautam Negi to kindly felicitate Mr. Arif with a token of our appreciation.
Thank you, sir. After the days-long proceeding, we would like to invite the last speaker for today's conference, Mr. Ashok Mittal, founder and CEO, Pressed Loans. Mr. Mittal is a seasoned professional having a rich experience of more than 30 years in capital and commodities market, banking, financial service, and foreign exchange. He has been a part of a Harvard Business School executive program called Managing and Transforming Professional Service Firms. Mr. Mittal is a gold medalist commerce graduate from MDS University, Rajasthan, and has done masters in banking management and CAIIB. He was the CEO of an agri-financing NBFC, prior to which he was heading commodities and currency businesses at MK Commotrade Limited as CEO and Carvi Comtrade Limited as country head. He has also had the experience of working with Union Bank of India and UCO Bank. Mr. Mittal has been regular in business media channels for more than a decade now, providing strategic inputs while also having a strong presence and networking with print and electronic business media. He has conducted more than 200 public seminars on various financial services segment and have been an eminent speaker in many national seminars of various organizations like PhD Chamber of Commerce, FICCI, ASSOCHAM, Exchanges, and ICFI, to name a few. He has been in the jury for Best Market Analyst Awards conducted by Zee Business for 3 consecutive years in 2012, 2013, and 2014. Mr. Mittal has been awarded by eminent personalities like Mr. Pranab Mukherjee, Mr. Narendra Modi, and Mr. Amit Shah. He is passionate about setting up and expanding businesses from scratch. Mr. Mittal will be addressing the audience on the topic financial literacy and trends in financing. Sir, it is an honor to have you amongst us today. I would now request you to address the audience. Please, sir.
Hello, good afternoon, everyone. And first of all, I would like to thank the institution for inviting me here and sharing my knowledge, experience, and whatever views I have. It is really a privilege to be here among all of you. While a lot of people have spoken before me, and being the last speaker is always a challenge. I mean, how do you really cover all the topics? But I think if I cover the points which are related to our industry, the lending space where we work as Pressed Loans, I'm sure there are not many things which we will be able to discover, discuss, and find how this industry is growing. So, as mentioned, fintech is not really a new thing. A lot of people have spoken. Fintech covers, let's say, financial technologies, which is a combination of two things. So, earlier when I was in bank, there was only finance. So, the main role job was financing, which means either you take money or give money, and there was hardly any part related to technology. We have seen in last 3 decades how technology has grown, how it has evolved from just small computers, then computers in the banking industry, and now very high-end technology, which is using AI and ML also. So if we broadly start how the fintech space has evolved and which are the various industries covered in this space are, let us say, if I speak from lending perspective, so there are banks using it, NBFCs using it, or other lending institutions like P2P lending companies using it. So there are various kind of lending institutions who have started using very advanced technology for various kind of credit facilities. This technology has also allowed these institutions to use various methods for underwriting. We will talk about them maybe a little later in detail. Secondly, it has come into, let's say, insurance space, where the way insurance was done and the way insurance is done now has drastically changed. So now the insurance underwriters look at a lot more data. They are able to track the data, and this is applicable to general insurance as well as life insurance, health insurance, etc. So people are able to evolve, check lot many more things, and then based on that take decision. Not only insurance, but it is also applicable to the I would say settlement of claims, repayments, whether they are on death, on maturity, on accident in case of insurance, payment in the hospitals in case of Mediclaim, etc. So lot more technology is being used. So a lot of alternate data is being used by insurance companies. Other than that, you can also see in various kind of financing activities, whether it is a investment, funding, equity investment, private equity, or debt instruments. So, lot many of them are being or using, let us say, technology from that perspective. So, whether it is a deposit, which means you are taking money from people, or it is a lending, in both ways there are various kind of institutions which has now emerged. And the latest, I mean to say, most spoken is, I can say now, the cryptocurrencies where people have started using, or NFTs where people have started investing, trading in cryptos. We have also seen a surge in the stockbroking activities where they have used technology in a big way. So you have a lot more stockbroking companies who have grown very big in a very short time in terms of providing their products and services. I would like to start from my sector, which is lending. So Press Loans is a non-banking finance company which uses technology very extensively. And I would like to share my experiences on that. So which will, I know some people have spoken on payment gateways, so I thought it will be appropriate to speak about technology being used in lending space. While I will give examples of, let's say, Press Loans or NBFC companies, they are also equally applicable to, say, banking industry because banks are into lending. They are also applicable to peer-to-peer financing company, P2P lending companies. They are also applicable to any other institutions who are into lending space because more or less they have been using the similar thing. At the same time, when we talk about NBFC, so there are various kind of NBFC companies, non-banking finance companies. They may be in gold loan space, they may be in microfinance, they may be in MSME, like we are in MSME sector. There may be in real estate, there may be asset reconstruction, there may be any other segment within this, let's say, lending space. But the prime points which we are going to talk are going to be more or less same. So if we really look at the customer journey, which means the borrower journey in lending space, how the borrower used to apply in bank, or even today how they apply in, let's say, traditional banks versus how they apply in a fintech lending institution. So the customer journey starts application of the loan. So instead of filling up a loan application manually, filling up a lot of information manually, and then going to, let's say, the institution or bank or NBFC applying for the loan, it has drastically changed. So first and foremost, most of the lending institutions either have a web application on the computer, laptop or desktop, or most of them have a mobile phone. Now the advantage of having a mobile phone application is that the moment you install the application, it gets access to certain data. Of course, with the permission, consent of the borrower or applicant, but it gets some information, not everything, but some information, which gives them a basic idea about the customer. So they need not to, let's say, verify lot many things again and again and again. The first and foremost part in lending space is the KYC, Know Your Customer guidelines, which are of Reserve Bank of India's guidelines. So primarily people trust that, okay, PAN card, Aadhaar card, driving license, voter ID card, these are the KYC documents which you need to take. How technology has evolved in today's world is that you just upload your KYC. You just upload your photo of PAN card and Aadhaar card, let us say. So now what I'm going to talk maybe at a different level in different institutions, but let us talk a medium-sized company which has reasonable establishment or infrastructure in terms of technology. The moment you upload your PAN card, so there is this optical character recognition, OCR technology, which can read out everything. So if in case of Press Loans, if you download the app and you just take a photo of your PAN card, you don't need to do anything else. whatever information is available on the PAN card, the system, the technology will read and fill up the columns in the application form. So what PAN card has? Your name, your date of birth, your father name, right? When the card is issued, and the PAN card number. Now, what technology does in the back and your photo? The back end, the technology, there are various service providers and so on. So number one, it will verify that this PAN card is existing, this belongs to you, it is active, and it will verify that information on the back end. So your PAN card is verified. And also the information on the PAN card is already taken in the application form. Then you upload, let us say, your Aadhaar card. So with the technology, it will
Sir, you can carry on. Sir, am I audible?
Yeah, hi. There was a little disconnect.
Okay, sir.
Is it okay now?
Yes, sir.
Yeah. So I was saying, in case of Aadhaar card, the moment you put Aadhaar card information, it takes you to UADI website, gives you some OTP. On the back end, every report comes in. So again, your name, date of birth, your full address, everything gets captured. So just note it down. Just by putting a photo of your Aadhaar card, the loan application is getting filled and your Aadhaar card verification is happening. So is, let's say, about other KYC forms. So the moment you keep, let's say, picture, the technology will read the information, fill up the application form, verify the application. This is how it has actually evolved. Third thing is, the moment you applied for the loan and you say, okay, I give my consent, the lenders on the back end will be able to fetch your credit bureau information. And the technology today can not only fetch that credit bureau report, but also analyze the report. So within maybe 30, 40 seconds, I was talking, not like minutes or hours, it will give the output that, okay, you are running so many loans. This is your current track record of the loan. These many inquiries you have made in last 1 month, 3 months, 6 months. How many write-off has happened? How many cases settled? Have you been paid on time or not? Every information not only available but analyzed. And based on that, we can run tooling on the back end. If the loan performance is so and so, then the application has to be processed or maybe rejected. Third drastic change has happened on the lending side is the bank statement analysis. Now it is actually extended to not only bank statement but also ITR, income tax return statements, GST, goods and service tax statements. So these are, the moment you upload these information, they are automatically read, analyzed, verified, and output is given. So I can say that in lending space, if you're using good technology, you can just get all those things uploaded by the customer and give your input maybe in few minutes, and you get your output in maybe about 1 minute, 2 minutes, 3 minutes, which can give you the exact result that the customer should get a loan, not get a loan, should take a loan, not take a loan, how much amount can be given, for what tenure the loan can be given. So we use technology and we have named it like pressed score. So it captures, let's say, financial data of the customer through bank statement and credit bureau reports. It also captures a lot of non-financial parameters about the customer, which gives his behavioral aspect, what is his spending habits, what is his social environment. Through social media, you can get to know what kind of behavior the customer has. And we create an alternate score, which is quite similar to credit bureau score. And based on that, we can take a decision on, let's say, 3 things. One, what amount the customer is eligible for the loan, for what duration, tenure of the loan, duration of the loan, and what kind of rate of interest should be charged. So it is quite dynamic. If your score is better or higher, similar to credit bureau score, that means you are a better profile borrower, and hence the rate of interest will be lower. And if the score is lesser, that means your profile is not really great, and your rate of interest is higher because your risk profile is so that you are slightly risky customer. And if that score, I'm not talking about credit bureau score, if that score is less than a certain cutoff, that means you are not eligible for the loan. So this is the first part in lending space where we are talking about customer journey, onboarding the customer. Now, second part is, let us say if a customer has been given the loan, then you need to service the customer. So in case of service the borrower, again, the technology allows you to communicate with the customer either through the mobile app which customer has downloaded, or through web application, emails, text messages, WhatsApp or any other communication system messages, social media interaction. So we, let's say, one click of button, or maybe sometimes by not even clicking the button, it can be quite automated that if your loan EMI installment is due on 10th of the month, maybe from 7th, 8th, 9th, 2-3 days, you will start getting messages by email, text message, WhatsApp messages, message on your social media, etc., that your loan EMI is due, kindly take your pick. So I need to say this allows you to integrate various platforms into one platform and communicate to the customer effectively. So is the customer also is able to communicate on the other side. If he is making payment, he can make payment by one is he's signing let's say ENACH, ECS or e-mandate, where you can debit the customer. But suppose he wants to pay, then he can pay by UPI, Paytm or any other payment gateway company, and the system directly recognizes this money has come from so and so customer because of this phone number, and then immediately you can say that the payment is credited to the customer's account. In our case, the mobile app allows the customer, the moment customer pays money, even if he pays money to the employee who has gone to collect physically, and suppose he has collected cash, the moment the entry is done, he will also get a text message. So he knows that my money has been credited to my bank account or to the loan account. So that is the second level in terms of servicing. And the moment these login ID passwords are given, so you can access all your information anywhere, anytime on live basis. Third part comes into of these customers is in case of meeting lot of compliances, I will say. So now you need to furnish lot more data to credit bureaus, to regulators, to CKYC agency where all the KYCs are stored, to surface in case of secured loans you need to. So all lot of data has to be given to various agencies, which is a very difficult task. And if it is prepared manually, then there is definitely a chance, there is a risk that there can be some kind of error. But since the information is getting fetched from the loan management system which you have and directly pushed through various API to those agencies, there is a synchronization of data, and the chances of any kind of error are very, very less. So I see that these many things are available from the lending space. Now, if I really look at some challenges, now when we talk about technology and we say advantage and people are able to get very good service, now there is no difference actually in a depositor and a borrower from the service point of view. So you will see like most people or banks would have been servicing a depositor far better than a borrower. But now the even borrower is given such a service that he need not to move anywhere. He can do everything sitting on his table. For example, one more aspect was signing the loan agreement. So you would have seen any one of you would have applied for a loan, and if you have to sign, you sign around 50, 60, 100 pages, right? And two things happen with it. Number one, a 50-page agreement, you don't read it, even if you want to read. Number two, by the time you reach on say 40th or 50th page, your signature changes. Now there are various tools available to do digital signature. It can be connected with your Aadhaar OTP, so you just put your Aadhaar number, mobile connection, and signature happen. It can be e-sign. It can be some various solutions which are available, so you can sign. So I mean to say there are various methods which are allowing the customers to have extremely good service. It's very quick. It is efficient. It is giving a very good, reasonable analysis in terms of analyzing the customer. But there are certain challenges, and I will also see what are the future trends in this particular space. More, this is applicable to entire lending space, more related to lending. One challenge I find that the regulators or the agencies are not perhaps up to date the way lending institutions, banks or NBFCs have become using technology. So I will give one example because we have less time. That if you look at the credit bureau reports, so credit bureau reports are not as live as the lending happens. So let us say hundreds of institutions are giving loans on a live basis, looking at the data. But we observe that the credit bureau reports or data is updated with a lag. So suppose it is March month reporting, that will happen somewhere between 10th to April or so on. And then when you fetch it is little outdated. So the decision which you take based on the credit bureau reports sometimes may not really match with the real credit worthiness of the borrower. So similarly, I think the reports going to Reserve Bank of India are also lagged. So they are also not on live basis. So it is quite possible that whatever the regulator is doing or action is being taken by credit bureau, by the other agencies, so the information there is little outdated. So you are not really well aware of any kind of activities happening which are negative, let's say court cases or frauds or all those stuff. So I think it is important that these agencies are also very strong and proactive on the use of technology. Second part is, despite of very high increase in the technology usage, still there are many areas, many businesses where the cash component, cash transaction are very high. And I'm not saying they are not doing it. It is the nature of the business that everything is not getting captured. So still when you use technology, there is little challenge in using those technologies. So there are some challenges, I will say, when human intervention is required. One aspect is using when we do secured loan, where there is a collateral, properties and all. So all the property transaction, marking the registration on them is not digital. So you need to still visit the sub-registrar office, get the lien marking done, hypothecation done, or what you call mortgage, register mortgage done. It takes time. So all data is also not online available. So that is another challenge in the lending space. On the technology side, there are a couple of things which I see, that is the topic of today's conference, is what is the way forward? So in these three areas, let us say whether there is insurance, whether there is financing, lending space, or any other digital space which are talking payment gateways, I see, especially to India, because India is a very, very large country. It has different culture, different languages being spoken, written. So there is an education level. A lot of people are not able to understand things, not able to read it. So I think there are three things which are very important. They have started happening, but will happen in future. I call them three V's. We say V for victory. But these three V's are, which I think will pick up in a big way. Second is the video. And third is vernacular. So what is going to happen in my personal view is that, number one, there is a lot of automation happening on the voice space. So the way we are currently communicating. So I think institutions will start talking to the customers, not through the call center, but voice robots. So when a customer will call, it is not really an individual talking, but a computer talking, and computer will have entire information, all the data of the customer. So I'm sure when you are calling nowadays to various call centers, it is quite possible that a robot is talking to you. In my view, the communication, two-way communication, not one way, not that we are sending a voice message, two-way communication with the customers, whether they are bank customers, payment gateway customers, lending borrowers, it will happen through the voice. Two, videos. So I see that the impact of a text, when you write a two-page note or email or book, is slightly lesser versus if you're able to explain the same thing in a video. It may be a very short video. People have started calling it reels, which are like 15, 30-second reels. So if you give a communication through a video message, which can be very short, 1 minute, 2 minutes, 30 seconds, it is very impactful. So people understand what you're talking. This will increase. So people will start communicating to their customers, borrowers, lenders by videos. It has to happen. Third and most important is vernacular. we are a country with various languages, and people feel comfortable if our communication to them is through their language, through the vernacular language. So I see that these first two things which I'm talking, the voice and the videos, even if there is any written communication, has to be in a language which is easily understood by the user. It can be borrower or whosoever, right? So we have already started seeing when we are communicating to the customers. So we communicate them to in English, we communicate to them in Hindi, and nowadays, if you see how people are using messenger communication, then sometimes they use Roman English or English, which means you type in English, but it's a local language, right? It may be Hindi or Punjabi or Telugu, Tamil, Malayalam, whatever language. So the regional language, which means when you talk to them, you talk to them in their language. You communicate in their language, which is a big thing which is going to happen. And there is a huge amount of scope for fintech players to use these three tools. So I think we are more or less up with the time. But I feel that this is the way forward for the fintech industry to grow, to use these three things or these technologies to better customer service, better compliances, so that regulations are well complied by the institutions. Thank you so much. If there are any queries, I'm happy to take them.
Thank you, sir, for your insights on the topic. I would now request Dr. Pankaj Varshney to kindly felicitate Mr. Mittal with a token of our appreciation. Please, sir.
Thank you so much, sir. Thanks a lot. I really appreciate. I thank you, the institution, once again, having me here.
Thank you, sir. I now request Dr. Anuj Verma, Associate Professor of Finance, to present the vote of thanks. Please, sir.
And good evening, all of you. On behalf of LBSIM, I think I am going to propose the vote of thanks. So thank you, Mr. Mittal, for enlightening our students about the fintech and the online loan process. In fact, during the whole day, we have been deliberating upon the fintech and how fintech is going to be useful and how fintech is going to grow in the future. Fintech and edutech, these are the two buzzwords right now going around. And I think fintech is going to be there, which is more beneficial for all of us. But I think edutech, what I have seen, and I can witness from the audience also, that these last 2 years, the education was on through tech. And I don't know, but I can see the students have not faced problem, but that they become lethargic. And now they don't want to attend physical classes. That's a flip side of edutech. But I think fintech is going to be there and going to stay and going to grow. So thank you all the speakers for enlightening our students about the challenges and the trends in the fintech industry. Thank you students for being here for the day and attending all these sessions and learning out of the sessions. Thank you, our chairman, for being there and showing us the path for the conference. Thank you to our director, Dr. Praveen Gupta. Thank you to our conference convener, Professor Pankaj Varshney. And most importantly, the main team of the conference, which I think led by Smita madam, for working so hard. So Smita ma'am, Shweta ma'am, Gautam Negi sir, and if at all something I have contributed, then I thank you to me also. So thank you all of you, and have a great day and all the best for the exams. Thank you. Good night. Bye-bye. God bless you.
Thank you, sir. With this, we would like to conclude today's conference. Thank you all for being a wonderful audience.